Very good morning, everyone. How are you all? Now, today we'll take the revision of Consolidated Financial Statement. As you all know, that very important chapter. Very important chapter. Correct? Why very important chapter? Because a question of 15 to 20 marks can be asked from this chapter. Correct? However, from my point of view, if you understand few things, whatever question they are asking, you will be able to attempt. Correct? But in this chapter, there are, I will say, you need to understand 3 points. First, what is the consolidation requirement for subsidiaries? Then for associate, and then for joint venture. Correct? Now for subsidiaries, we have Ind AS 110. For associate and joint venture, we have Ind AS 28. Ind AS 28. Correct? Now of course, let us start with what? Subsidiaries. Then we'll move to what? Ind AS 28. However, before Ind AS 28, we'll also do, there is one more Ind AS 111, which is related to joint arrangement. Now joint arrangement will say the joint arrangement are of two types. One is joint venture, one is joint operations. So joint operation accounting treatment is given under Ind AS 111 only. And for joint venture we need to move to what? Ind AS 28. So that we need to understand. Correct? Let us start. Now, if I say consolidation, the starting point of consolidation is what? Business combination. Means formation of subsidiary is an example of business combination. Correct? It means when any company obtain control over another entity. So whenever control is obtained, on that date Ind AS 103 is applicable. Correct? Understood? Means what I want to say, suppose this is the date when control is obtained. Control is obtained. So how control will be obtained? By acquiring shares of another entity. Now what is the meaning of control will do at the end? Understood what I am saying? So whenever control is obtained, means parent company acquire control over subsidiaries. On this date, which Ind AS will be applicable? 103. Then at each reporting date, they need to prepare what? Consolidated financial statement. So to prepare consolidated financial statement from the date of acquisition, Ind AS 110 will be applicable. Ind AS 110 will be applicable. Understood? Means we'll concentrate on Ind AS 110. But what I want to say, on the date of acquisition, which Ind AS will be applicable? 103 will be applicable. Correct? Detailed discussion about 103 will be done in a separate chapter, business combination. But can I say, if I want to start this chapter, the concept number 1 will be what? Calculation of goodwill or gain on bargain purchase on the date of acquisition. On the date of acquisition. Date of acquisition means what? The date when parent company obtain control over subsidiary company. I hope everyone know the formula to calculate what? Goodwill. So what is the formula to calculate goodwill? We need to find out fair value of consideration paid. Fair value of consideration paid is nothing but PC, purchase consideration. Correct? In this chapter, means in consolidation chapter, PC will be given in the balance sheet only. Means in separate financial statement of parent company, there will be cost price of investment. And can I say the cost price of investment in subsidiary is nothing but what? PC. Means in this chapter you are not supposed to calculate PC. PC will be given in what? The balance sheet of parent company. Which balance sheet? Separate balance sheet of parent company by way of cost price of investment, correct? Sometime they don't give you the cost price of investment, they will say that investment is not yet recorded. In that case you need to calculate PC, but that PC calculation will be very easy. However, detailed discussion how to calculate PC will do in which chapter? Business combination chapter. Then we need to find out value of NCI on the date of acquisition. So who are NCI? NCI is the other owner of subsidiary company. Means can I say in the books of subsidiary company there are two owners. One is parent company, one is other owner. So that other owner will be non-controlling party and parent company will be controlling party. So the other owner are known as non-controlling interest. So we need to find out the value of NCI on the date of acquisition. Then we'll also add the value of previously held equity interest. It is quite possible that some equity shares were acquired before the date of acquisition. So we'll add that also, fair value of previously held equity interest, correct? However, this point I will discuss separately once again. This is known as step acquisition. Step acquisition. So once again I will discuss about this point in the later part, correct? Now only concentrate on PC plus value of NCI. From this PC and value of NCI means from this total we'll deduct what? Fair value of INA. Fair value of INA means what? Identifiable net asset of which company? Subsidiary company on the date of acquisition. This value of INA, fair value of INA will be excluding goodwill. So if any goodwill is appearing in the balance sheet of subsidiary company, that should not be considered in this fair value of INA. So this will be always INA, identifiable net asset, excluding goodwill but including other intangible asset. Including other intangible asset of which company? Subsidiary company. This will be if positive amount is coming, then goodwill. If negative amount is coming, then gain on bargain purchase. Gain on bargain purchase is ultimately transferred to what? Capital reserve. Ultimately transferred to capital reserve. Now only one point which you need to understand in this concept number one, how to calculate this value of NCI. So Ind AS 103 has given how many method? Two method to calculate value of NCI, correct? So what is the how to calculate value of NCI? Batao. Value of NCI. They have given how many method? Two method. One is always fair value method. First is what? Fair value method. Fair value method means what? Number of equity shares. Number of equity shares not held by parent company, means we can say in this one, number of equity shares held by non-controlling party in subsidiary company. The number of equity shares not held by parent company multiplied by what? Fair value of equity shares of subsidiary company. Fair value of equity shares of subsidiary company. So of course fair value of equity shares will be given in the question, or they will give you some method to find out the fair value of equity shares, correct? Yes sir. So this is known as fair value method. This is known as fair value method. Can I say very easy? Fair value of NCI, correct. However, what Ind AS 103 says that if fair value of NCI cannot be measured reliably, then we'll use which method? Proportionate share in INA method. Proportionate share in INA method. Proportionate share in INA method. I call it Pasina method, correct? Proportionate share in INA method. The proportionate share in INA method means what? We need to first find out fair value of INA. Fair value of INA. Can I say that too will always calculate goodwill? Fair value of INA. This fair value of INA will be once again excluding goodwill. Fair value of INA. Whenever we say fair value of INA, it will be always what? Excluding goodwill. Multiplied by what? Multiplied by what? Percentage share of NCI. Means whatever share of NCI that will be given in the question. If parent company hold 80%, so NCI will hold 20%. Understood? The percentage share of NCI, this will become what? Pasina method. Means value of NCI by using which method? Proportionate share in INA method. Correct. Now from examination point of view, Whenever fair value method information is not given, always apply Pasina method. Means whenever question is silent about fair value of NCI, whenever question is silent about fair value of NCI, so you are not supposed to calculate fair value by any other method by your own. Whenever question is silent, always apply which method? Proportionate share in INA method. Correct? Means whenever they have not said ki which method need to be applied, apply which method? Pasina method. Are you getting what I am saying? So from examination point of view, understood? Then this is very easy. The formula is also easy. What is the formula? Fair value of consideration paid plus fair value of NCI, or is value of NCI minus fair value of INA, minus fair value of INA. This become what? First method. Understood? Any doubt? No doubt. I think this is very easy. Correct. Now only to explain you, when I am saying PC means fair value of consideration paid. This is calculated based on Ind AS 103. Detailed discussion will do under Ind AS 103, but sometime in this chapter also they may ask you to calculate PC. So this is nothing but, can I say, cash payment. It will include cash payment. Cash payment to whom? Cash payment to the shareholders of subsidiary company. Means whenever we acquire shares, so whenever we acquire shares, so can you see this acquisition of shares can be at 2 points of time. Either on the date of incorporation, means we directly subscribe shares from the company. Correct now. So whenever it is on initial offer, means whenever it is at the time of incorporation of a company, so we are getting equity share directly from the company. So at that point of time we may obtain control. So that time whatever equity shares are issued, that whatever we are paying cash, that we are paying directly to subsidiary company only. But normally in this chapter they will ask that equity shares is acquired after incorporation, means equity shares has been purchased from stock market or directly from shareholders or directly from shareholders. So whenever question is silent, we'll always assume that the equity shares are acquired from market, means directly from shareholders in this chapter. So whenever question is silent, what will assume? Equity shares are acquired from shareholders directly. It means PC is paid to subsidiary company or PC is paid to the shareholders of subsidiary company. So PC is paid to the shareholders of subsidiary company. I hope you are understanding. So it means this cash payment to whom? Correct. Plus what? Fair value of equity shares issued. Fair value of equity shares issued will be done. So cash payment plus fair value of equity shares issued plus any deferred consideration. Any deferred consideration will be also added. Deferred consideration means what? Any payment which will be made after some time, means not on the date of acquisition, it will be paid after 1 year or 2 year or 3 year, as the case may be, that we know, that we call it deferred consideration. Correct? And it will also include what? Contingent consideration. Contingent consideration. It will also include contingent consideration. Correct now? So contingent consideration means what? Consideration which is paid only on the happening of some uncertain future event. Correct now? Are you getting what I am saying? So contingent consideration are the consideration payable only on the happening of uncertain future event. That means contingent consideration. This all together become what? Purchase consideration. So sometime if PC is not given, so we can calculate by using this formula. Now when I am saying deferred consideration, so can you say we need to find out present value. So deferred consideration will be included and measured in terms of present value, and this contingent consideration will be included and measured in terms of fair value. Means the fair value of contingent consideration will be added to the PC on the date of acquisition. Don't worry, this fair value will be always given the question, because wherever fair value, the fair value is measured as per Ind AS 113. So they will not ask you to measure fair value. Fair value of contingent consideration on the date of acquisition will be given in the question. But can I say present value, so you need to calculate, because you are expert in calculating present value. So for deferred consideration, you need to calculate present value. Understood? Now, can I see this contingent consideration? This contingent consideration, everyone, can I say may be payable in cash or may be payable in equity shares? This contingent consideration may be payable in cash or may be payable in equity shares. And these equity shares can be either variable number of equity shares or it can be fixed number of equity shares. Now because we have done financial instrument chapter, that point also we discussed. So whenever it is payable in cash and variable number of equity shares, it is initially classified as financial liability. Whenever it is settled in the form of fixed number of equity shares, it will be classified as what? Equity. So can I say whenever it is financial liability, then we need to do some subsequent measurement, and subsequent measurement will be done at fair value only. So at each reporting date, contingent consideration will be subsequently measured at fair value. So can I say any increase or decrease due to subsequent measurement will be transferred to PL if it is financial liability. Have you understood? So can I say because it is classified as financial liability, therefore it should be subsequently measured. Subsequent measurement will be done at fair value at each reporting date. Due to that subsequent measurement, any gain or loss will be transferred to PL. But if it is classified as equity, then subsequent measurement will be done at what? No subsequent measurement, then will not apply any subsequent measurement. Understood? This point have you understood? So I hope you have understood concept number 1. Correct. Now coming to what? Next point. This point you have understood? Now. Correct. Now one more point. Whenever, now you have understood that the formula is what? Fair value of consideration paid, fair value of consideration paid plus value of NCI, value of NCI. Correct. This is the total. I am not taking right now fair value of previously held equity interest. That will be a separate topic. I will discuss there. Understood? Correct. So this become total. Correct. And from this will deduct what? Fair value of INA. Fair value of INA. This become what? Goodwill or gain on bargain purchase. Correct. Now we have understood that this can be either what? Fair value method, or it can be which method? Pasina method. Understood now? Pasina method. Understood why I am calling it Pasina method? Because Pasina full form is what? Proportionate share in INA method. Now whenever we have used fair value method, so if you have used fair value method, this goodwill will be what? Full goodwill. This goodwill will be full goodwill. Means 100% goodwill. 100% goodwill. But whenever we have used proportionate share in INA method, then this goodwill will be what? Partial goodwill. Partial goodwill means we have only recognized goodwill to the extent of parent company shares. We have only recognized goodwill to the extent of parent company shares. But when I am saying full goodwill, it means we have recognized goodwill to the extent of parent company as well as subsidiary company, parent company and NCI shares. Correct now? Means whenever full goodwill, so can I say it belong to parent company as well as NCI? It belong to parent company as well as NCI. Whenever partial goodwill, it belong only to parent company. It belong only to parent company. Correct? Understood? Means just try to understand. When we do consolidation, suppose this is consolidated balance sheet. Correct? So can I say we will write down all asset. We write down all asset of which company? All asset of subsidiary company. Correct? Understood? All asset of subsidiary company means along with the asset of parent company will incorporate all asset of subsidiary company. Correct? Similarly, we also include what? All liability of subsidiary company. So can I say in consolidated balance sheet, what is the objective? What is the objective of consolidation? Incorporate all asset of subsidiary company, include all liabilities of subsidiary company. Batao, at which value? At fair value. At fair value. At fair value. So all asset of subsidiary company will be included. At which value? Fair value. All liability of subsidiary company will be included. At which value? Fair value. This point have you understood? Correct. My question to you all, this asset will be 100% or means when we do consolidation. So suppose parent company share is 80%. Suppose parent company share is 80% and NCI share is 20%. My question to you all, will include 100% or 80%? You only say. Are you able to understand? So when we included assets of subsidiary company, parent company share is 80% and NCI share is 20%. So 80% plus 20% become 100%. So what I want to say, when you will incorporate all asset and all liability, we should incorporate 100% or 80%. 100%. 100%. No doubt about this. I'm just asking you. I know you all know this point, correct? It is always 100%, correct? This point have you understood? My next question is that when I am writing goodwill, this goodwill, everyone, which goodwill? This goodwill? This goodwill. My question to you all, this goodwill, first this goodwill of which company? Batao. I am saying this goodwill now. This goodwill will be calculated. Do we write down this goodwill in the balance sheet? So goodwill of which company? Goodwill of which company? Everyone will respond. Live class. Everyone respond. I have 2 WhatsApp group. So I need to cross check both the WhatsApp group. Please. So respond everyone. I have 2 WhatsApp group. So I will cross check both WhatsApp group. Are you replying or not? Okay. Hello. This is the goodwill of which company? I'm not listening. Goodwill of? Selling. What is selling company? Parent or subsidiary? Selling company is, what is selling company? Huh? Either parent or subsidiary. Goodwill of which company? Parent or subsidiary? In live class, everyone is saying parent company. Goodwill of which company? Either say parent or subsidiary. Don't wait. Goodwill of which company? Parent company? Goodwill of parent company? Everyone is saying parent company? Everyone is wrong. This is the conceptual mistake. Arey batao, this is asset of which company? This is liability of which company? This is goodwill of which company? Subsidiary company only. Goodwill of subsidiary company we have acquired na. How it is goodwill of parent company? Then so you should say this is asset of parent company. When you are saying I have written all asset of subsidiary company, then here also you should say parent company. This is goodwill of which company? Subsidiary company. Goodwill of which company? Subsidiary company incorporated in the balance sheet of parent company. Understood? Have you understood? Now my question to you all, this goodwill should come 100%. This goodwill should come 100% or 80%? This goodwill should come 100% or 80%? Huh? No. Apply common sense. If you are saying this is 100%, this should be also 100%, na? It should be 100%, correct? Means can I say fair value method is more proper? Fair value method is more appropriate, that I want to say. Means can I say this goodwill, if you are writing full asset, if you are writing full liability of subsidiary company, so you should write down full goodwill of subsidiary company. So can I say, but this is not at fair value. This is not at fair value. Okay, this is the difference. Difference calculated by using this formula. By using this formula. Are you able to understand what I am saying? Means goodwill will come as a difference, but this goodwill will be what? Goodwill of subsidiary company. But can I say it can be either 100% or 80% depending upon fair value method or Pasina method. Understood? Means sometime we can't apply fair value method, so some relaxation has been given. In that case, prepare your financial statement based on Pasina method. Understood what I am saying? Have you understood? Means this, everyone, what I want to say, everyone just try to understand. Can I say this asset will always belong to parent and NCI? Means 80% and 20%. If 80% is the share, this liability will also belong to parent and NCI. Are you able to understand? But this goodwill, if it is full goodwill, If it is full goodwill, then belong to what? Parent company and NCI. This point you have understood? This point you have understood? Means, can I say, in case of full goodwill, this NCI will come in what? Equity side of balance sheet. NCI will come equity side. So can I say NCI will be what? INA of subsidiary company plus full goodwill multiplied by 20% or not? Batao. Have you understood this point? Means, can I say, whenever we are using full goodwill method, NCI will be equal to what? INA of subsidiary company plus full goodwill multiplied by 20% proportionate share in NCI. Correct? Have you understood? But if I am using which method? So asset will come 100%. So this asset will be parent company and NCI 80% and 20%. Liability will come 100%. This liability will be also parent and NCI 80% and 20%. But when I am saying partial goodwill of which company? Subsidiary company. Partial goodwill of subsidiary company, but attributable only to parent company. This is the wordings. This is not of parent company. This is partial goodwill of subsidiary company incorporated in the balance sheet of parent company, attributable only to the owner of parent company. But when I am saying full goodwill of which company? Incorporated in the balance sheet of parent company, attributable to both parent and NCI. I hope you understand. This is the conceptual mistake I have seen. Many students do not understand this point. But how much parent company? 80%. And how much NCI? Nil. Anda. Means in this case NCI will be equal to what? What you only say. In this NCI will be INA multiplied by 20%. Means, can I say, whenever full goodwill method, NCI is proportionate share of NCI in INA and goodwill. Whenever Pasina method, then NCI is equal to proportionate share of NCI in INA of what? Subsidiary company, excluding goodwill. This point have you understood? Yes sir. Thoda understood. That is only check karo. What have done? If NCI is measured, full goodwill will be recognized, which is attributable to both owner of parent company and NCI. If NCI is measured by using Pasina method, partial goodwill is recognized, which is only attributable to owner of parent company. This much you understood? Have you understood this much? Correct. Now just try to understand. Because this chapter, when I teach in regular batch, my teaching style will be totally different. When I am teaching in crash batch, my teaching style will be totally different. Correct? Because this chapter, you know what is required. So I need to now only explain from examination point of view. Correct? Now, everyone just try to understand. Coming to 1 second at formula. Formula is what? Fair value of consideration paid. Fair value of consideration paid. Fair value of NCI. Correct? Understood? Can you say this will be given in question? If not given, we can easily calculate. Are bolna re? Means, can you say if not given, so information will be given to calculate it? Can you say this will be also given in the question? If not given, so they will give some information to calculate fair value of NCI. Means a separate information will be given for this. This is no doubt, this can be easily calculated. Means now our objective is to calculate what? Fair value of INA. So objective is to calculate fair value of INA in this chapter. Understood? Now, to calculate fair value of INA, what do you require? What we require? We require asset of subsidiary company and liability of subsidiary company. At which value? Fair value. At which value? Fair value. Correct? Can I say this will become what? INA of subsidiary company. At which value? Fair value. Understood? Very easy. But we want this value on which date? On which date? On the date of acquisition ki on the date of consolidation? On the date of acquisition ki on the date of consolidation? Means, just try to understand. Suppose this is the date of acquisition. This is 1/4/2017 and they have asked you to prepare consolidation on 31st March 2020. Correct now? Means some year before we have acquired. So this is date of consolidation. This is date of acquisition. Correct? So we want this fair value of asset and fair value liability on which date? On the date of acquisition or on the date of consolidation? Date of acquisition. We want on this date. Means if you want on this date, so you want balance sheet as on this date, but they will not give you the balance sheet as on this date. Means if they have given this information, then to very easy, but they will try to trouble you. They will not give balance sheet as on this date. Means they will not give you information about asset and liability of subsidiary company as on this date. Then how to calculate this? So can I say, we know one equation, equity is equal to what? Asset minus liability. So if they will not give you information about asset and liability, we can use which information? Equity information. Therefore in this chapter, normally, means practically they will use this method. Means when you are in office, if you have done consolidation, then you have used this method, because we have asset, we have liability. On the date of acquisition, we will calculate in that way only. But from examination point of view, they will not provide information about assets and liability of subsidiary company on the date of acquisition. Therefore, can I say we need to use equity approach? Equity approach means equity share capital plus reserve and surplus. So can I say equity share capital plus reserve and surplus will be INA of what? Subsidiary company. If they provide that information, of course they will provide. Of course they will provide. So what we'll do? For calculation of fair value of INA, we'll prepare one statement of net assets. Statement of net asset. By using which method? Equity approach. Why equity approach? Understood now? Because in exam they are not providing the information. If they provide information, we can use asset minus liability approach. Asset minus liability approach. So we write on here two columns, date of acquisition and date of consolidation. And can I say any period between this is known as post period. It is known as what? Post period. It is known as post period. Understood? Post acquisition period. Post acquisition period. Statement you are understanding. This is what date of. This is what date of. Suppose date of acquisition is 1/4/2021. This is 31st March 2022. So this is which year? 21-22. Correct? Understood. Now what we'll write down? We write down equity share capital, opening balance and closing balance. Understood? Normally, means normally not, always equity share capital, opening balance and closing balance will be same. Means if opening balance is not given, we'll assume opening balance and closing balance are same. Means we'll assume there is no increase or decrease in equity share capital during the period. Understood? So we'll always assume what? Whatever equity has been whatever equity share capital has been given in the balance sheet on the date of consolidation will always come here. Means this will become opening balance and there is no difference. Then we write down reserve and surplus. Means we can say other equity. Other equity will be many reserve and surplus. It can be retained earning, it can be general reserve, it can be any other reserve and surplus. Normally in exam they give two reserve, general reserve and retained earning. I don't know why they don't give other reserve. Pata nahi. Correct now. But can I say they can give many reserve and surplus? If you go to balance sheet of any company, there can be general reserve, dividend equalization reserve. There are many other reserve also. So all reserve and surplus will come. So can I say this will be opening balance, this will be closing balance. And the difference will be, can I say difference will be profit of which period? This period. Profit of this period. Understood? So can I say this become what? This become what? Net asset on the date of acquisition. But life is not simple. Life is not simple. This much you understood. So I hope you understood why we are preparing statement of net asset by using which approach? Equity approach. So my question to you are, this amount is what? This amount is equity or INA? This amount is what? Equity or INA? It is equity or INA? Bolo. Huh? I'm not listening. But loud. INA. Can I say it is equity is equal to INA? But what is the objective? Objective is to calculate INA or equity. So it means, can I say, we should write on this is carrying amount of INA. This is carrying amount of INA, na? But we want what? Fair value of INA. So some adjustment is required. Some adjustment is required. Correct? Understood. So what are the adjustment required that we need to understand? So there are some adjustment required. First adjustment is abnormal item. If there is an abnormal item, what will do? Second adjustment is what? Dividend paid by subsidiary company. Second adjustment. Third adjustment will be what? Fair value adjustment. Fair value adjustment. Correct? And fourth adjustment, normally they are not asking in new syllabus, but they may give some error. They may give some error in the books of subsidiary company. Acha, when I am saying this statement of INA, so this is statement of net asset of which company? Subsidiary company. Means any information related to parent company is not relevant for this statement. Any information related to parent company is not relevant for this statement. Means when I am saying abnormal item, so abnormal item in which books? When I am saying dividend paid by which company? When I am saying fair value adjustment in whose books? When I am saying error in whose books? So can you see this all adjustment in which books? Subsidiary company. These are the four adjustment. If you understood these four adjustment, the life is simple, otherwise life is complicated. I will take one question. With one question, I will explain you entire thing. But have you understood? Correct. Now there are, just try to understand. This chapter sometime is difficult in crash batch. Why? Because you have done this chapter from some other faculty. Correct. So every faculty have a different approach of teaching this chapter. However, end solution will be same. Some teach by giving some format. They will give some format and then apply it. I don't give any format. Some will teach by some other way, means they will do some analysis of profit like this, etc. There are some other way also, but result will be same. Concept remains same, but the working note may be different. The presentation of working note may be different. If you see ICAI solution now, so every question working note pattern is different. So I will say in this chapter, never follow ICAI solution. Because if you follow ICAI solution now, you will die. In some question they are using some other format. In some question they are using other format. You will be confused what to be done. So we will have some standard way. Correct? So whenever I am, now you are into crash batch. So if I am teaching you, I will follow my method only. Because I don't know what the way you have done this chapter. But automatically at the end, the result will remain same. Correct. Suppose you are finding difficulty in any point, so you can ask me. Correct now. So I will explain you once again why we have done in that way. Have you understood this much? So I hope you have understood why we have prepared statement of net asset. Correct. Statement of net asset is to calculate INA on the date of acquisition. Why we are calculating INA on the date of acquisition? To find out goodwill or gain on bargain purchase on the date of acquisition. Means goodwill will be always calculated on the date of acquisition, not on the date of consolidation. Yes, sir. Correct. Now let us come to, can I take one question to explain you entire thing? You can see I have taken one question. Very simple question I have taken. Balance sheet as on 31st March 2016. Equity, share capital, general reserve, profit and loss account, creditor, fixed asset. Fixed asset means what? Property, plant and equipment. Now, fixed asset means property, plant and equipment. Investment in equity share 70%. So 70% means parent company share is what? 70%. And this is nothing but PC. So this is PC. PC is given in the question. In this chapter, PC will be always given in the question. Thank you very much. And current asset they have given. Shares were acquired on 30th June 2015. 30th June 2015. Balance in general reserve and PL account. So you can see opening balance of general reserve is given and PL is given. I hope you have understood why they have given opening balance. This is required. If they have not given these, then to will die na. They will provide these. Why they have given this information? To prepare statement of net asset by using which approach? Equity approach. Why? Because they have not given balance sheet as on this date. If they have given balance sheet as on the date of acquisition, then we could have used asset minus liability only. Yes, sir. During the year, dividend at a rate of 10% was paid by S Limited for the year 2014-15 from his pre-acquisition profit. Correct. Means what does it mean? If dividend was paid during the year out of pre-acquisition profit. Means this is final dividend. Final out of pre-acquisition profit means previous year profit. Means can I say it is what? Final dividend. Means dividend paid in current year. For which year? Previous year. So this become final dividend. This is final dividend. There was an abnormal loss on 1/5/2015 for S Limited 10,000. Insurance claim received is 4,000. What is the loss? Okay, loss is equal to 6,000. Loss is equal to 6,000. When the shares were acquired, agreed value means fair value. Agreed value means fair value of fixed asset. Fixed asset means property, plant and equipment of S Limited was 4 lakh. Although no effect has been given thereto in account, of course, can I say this fair value adjustment is required for consolidation? Is required for consolidation. Depreciation has been charged at a rate of 10% on book value on reducing balance method. Reducing balance method means RBM. RBM is also known as diminishing balance method. Sometimes we call it WDB method also. Reducing balance method, diminishing balance method, WDB method, all are same. Previous CBS. Can we do it? Means what actually they have given. They have given what is the opening date, what is the closing date. The balance sheet is given on 31st March 16. What is the opening date? 1/4/2015. What is the date of acquisition? 30th June 2015. Means one thing is clear that this is date of acquisition, this is date of consolidation, so this is post period. This is post period. This is how many month? So this is what? Pre-period. This is how many month? 3 months. Now they have given, we want equity share capital, PL and general reserve. So they have given opening balance of PL how much? Don't have question. Opening balance of PL is what? 70,000. 70,000, it is given in point number 2. 70,000. Opening balance of general reserve how much given? 20,000. What is the closing balance of PL given? Closing balance of PL of from which company? Whenever I am preparing Sona means statement of net assets. Sona, correct? So this you will take, huh? H Limited information is required only to prepare balance sheet. Only concentrate on subsidiary company. Concentrate where? Concentrate where? Subsidiary company. Only think about देखो, just try to understand why I'm saying, because normally student in exam hall, I always say exam hall is very important place. You know, but you need to apply. Knowing and applying is two different things. Believe me, this is two different. You know, I'm not saying you don't know, but can you apply? In that application part, you need to become expert. Normally we think we know, we can do it. No, 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 no. That is not. Knowing and application is very different. For applying, na practice required. You know how to play the games. But when you come to application, applying, you require practice. You know how to do these questions. But applying is more important thing. Correct? For that, lot of concentration required. Lot of concentration. Exam hall, if your mind is not working, if you are not able to concentrate, game is over. Game is over. Understood now? It means exam hall, you should be relaxed. Normally, I think that in exam hall you should enter without any tension. जो होगा देखा जाएगा. Maximum what will happen? Next attempt is there na. Because I should not say. But in CA exam, unlimited attempt is there. So why do you take tension? Because I'm not saying take unlimited attempt. But if you want to perform, you should be relaxed. You should be relaxed. जो होगा देखा जाएगा. Performance will come only when you are relaxed. Correct? So that is also required. So PL account 1 lakh. 1 lakh na? Closing balance. General reserve is how much? 70,000. Equity share capital how much? Because closing balance is not given. Normally they don't give what? So we'll assume what? Same. This is always same. Correct? Understood. This point you understood? Now, suppose they have not given opening balance of general reserve. So there is one standard assumption. In this chapter, there are some standard assumption. You can't change that assumption. If you change the assumption, your answer is wrong. So whenever question is silent about opening balance of general reserve, we'll always assume that closing balance and opening balance are same. Means there is no transfer of profit during the year for general reserve or any other reserve apart from retained earning. This PL account is nothing but retained earning now. But for retained earning, if opening balance is not given, we'll assume opening balance is nil. Standard assumption, huh? Correct? So can you say for equity share capital or any other reserve and surplus, if opening balance not given, what assumption? It is equal to closing balance. But for retained earning, if opening balance not given, it is quite possible they have not given opening balance, then we'll assume opening balance nil. This is the standard assumption. You can't change the assumption. If you change the assumption, your answer is wrong. This much you understood? But can you say we want this figure na? We want this and this. So this become what? INA on the date of acquisition. INA on the date of acquisition. Correct? Are you able to understand? So how to calculate this, that we need to understand. This point you have understood. So for that we'll prepare what? Statement of net asset. Correct? On which date? On the date of acquisition, on the date of consolidation. Correct? And this is the post period. Date of acquisition is what? 30th June 2015. Date of consolidation is what? 31st March 2016. This is 9 months. Correct? Then first what we'll do? We write on all opening balance. Even though that opening balance does not pertain to this period. Correct? One second. You might have done the same question by some other format. I'm using the way how I teach. Okay, na? So first write on equity share capital. Equity share capital. PL and general reserve. Correct. How much? 3 lakh 3 lakh, then 70,000, 1 lakh, then 20,000 and 70,000. Understood? So whenever there are two reserve and surplus, what we'll do? In post we'll have two columns. One is for general reserve, one is for PL. Correct? So we write down how much PL, how much general reserve in post period. Correct? This is for which period? Post period. So this is to nil. How much PL difference? 30,000. How much general reserve difference? 50,000. Have you understood this point? Correct? Understood? Correct. Now just try to understand, everyone. This become how much? 3 lakh 90,000. This is 30,000. This is 50,000. This become 4 lakh 70,000. Can I say this profit is what? For 12 months. If you transfer from this 12-month profit, 3-month profit to the first column, so automatically, can I say this will become net asset on the date of acquisition? Means, if you see this, correct, this is the changes during opening balance and closing balance. Changes is only due to profit earned. Changes is only due to profit earned during this 12 month. Means, if suppose we know the total profit, so this total profit belong to how many months? 12 months. If out of that profit, 3-month profit is transferred to this date and 9-month profit belong to this post period, so automatically, can you see this 3 lakh plus 70,000 plus 20,000 plus 3-month profit will become net asset on the date of acquisition. Understood? Means, can I say, if you add 3-month profit to INA on the date of opening balance, automatically it will become INA on the date of acquisition. Automatically it will become INA on the date of acquisition. Means opening balance and closing balance and opening balance are different only because of profit earned during the period. So if profit will increase, so your net asset will increase. If profit will decrease, your net asset will decrease. So can you say we need to find out first profit of 12 months, then allocate in pre and post period. So right now this profit is for how many months? 12 months. This much you understood? But just try to understand, whenever you want to allocate profit, so you will allocate profit before dividend ki profit after dividend. Means whenever you want to allocate profit in 3 months and 9 months, so you will allocate which profit? Profit earned during the period ki profit after appropriating dividend? Profit? No. Can I say, just try to understand. First we need to find out what is profit earned during the period. And for allocation, we will take one assumption that profit has been earned evenly throughout the period. So of course, which profit? Net profit is earned evenly throughout the period. Means practically to what we should do? Practically to we should prepare trial balance as on this date. Means we need to find out 3-month actual profit and then we should add it. But because the information is not given about 3-month transaction, therefore what we'll do, first we'll calculate 12-month profit and we'll assume that profit is earned evenly throughout the period. Can you say bakwas assumption? Bakwas assumption practically we'll never do, but only from examination point of view we are doing time allocation. So what we'll do, we'll allocate profit in time ratio. Which profit? Profit before dividend. But can I say this profit, you only say this is after dividend ki before dividend? This profit 30,000 and 50,000 is profit after dividend, before dividend? Arey Baba, this is closing balance of reserve, this is opening balance reserve. Difference is profit after dividend or profit before dividend? Dividend is already declared na. This is profit after dividend. What we want? Profit before dividend. So what we should do? Add dividend. Correct? So we'll add back dividend. Correct? Understood. So guys, first adjustment we are doing for what? Final dividend paid. Final dividend paid. Understood. How much dividend they have given? 10%. 10% of what? 10% of equity share capital? 3 lakh. Can I say this will be added? Understood why we have added? To find out profit before dividend. Understood? Have you understood? Correct. Any doubt? Any doubt, ask me, because if you will not ask, I will assume you have understood. Understood? I'll wait after every concept so that once you say yes, I will go. I'll wait for live classes also. Please, live class student, respond. Have you understood this much? Hello. Now, second point, everyone. But this profit is after abnormal loss or before abnormal loss? After abnormal loss. But if you want to allocate profit, correct now, means just try to understand abnormal loss occurred during which period? On which date abnormal loss happened? 1/5 now. So during this pre-period abnormal loss occurred. Abnormal loss of how much? 6,000. Now, and we have been given profit of 12 months. Can you assume abnormal loss occurred evenly throughout the period? If the information has been given abnormal loss has occurred during pre-period, can you assume abnormal loss is happened throughout the period? No. It means, can I say, to allocate profit in pre and post, first we want profit before abnormal loss, and they have given profit after abnormal loss. So we should add back what? Abnormal loss also. Understood? Have you understood? So we'll do what? Plus abnormal loss. Are you able to understand? Are you able to understand what I am doing? Correct. Means one thing you might be thinking, that's why you are writing here also. Can I say equation is what? Date of acquisition plus post is equal to what? Date of consolidation. This is the equation. Therefore, whatever you are writing in the date of acquisition, whatever you are writing post, that will be added and that will come where? In the date of consolidation. And therefore, when I am writing 30,000 here, so I am also writing 30,000 here, because that will also affect date of consolidation. Understood? Have you understood? Can I say if there is some error, so we should also rectify that error before allocating the profit? So if suppose some error is given in the question, so due to rectification of that error, either profit will increase or profit will decrease. In this question, no error has been given, but that error should be also rectified or not? That error should be also rectified or not? Are you able to understand? So we have done rectification of that error. If suppose given normally in ICAI new solution and new study matter here, new syllabus study matter, they have not given any question with error, but they may provide. You can't say it is out of syllabus if they have given in the question. Have you understood? Means after this, what happened? This become 3,90,000. This becomes 66,000. This become 50,000. This is how much? 5,06,000. So can I say now this profit is what? Okay, this profit is what? Yes, this profit is normal profit earned. When I say earned means before appropriation, earned for how many months? 12 months. Normal profit earned for 12 months. So this much profit is earned before appropriation. Now out of this profit, 3-month profit belong to pre-period and 9-month profit belong to post-period. So can you say from these 3-month profit should be transferred to this column? So we'll do plus minus time adjustment. We'll do plus minus time adjustment and we'll apply 3 by 12. So can you give me 66,000? 3 by 12 how much? How much? 16,500 minus from this, then 50,000 into 3 by 12. 12,500 minus from this, and this 2 will be added where? In date of acquisition. So date of acquisition how much? 29,000. Have you understood this part? Follow. So this become how much? 3,90,000 plus 29,000. 4,19,000. Correct? 4,19,000. This is how much? This is how much? This will remain same. Understood? Correct. Now can you say this become, this is now what? This is what? Carrying amount of INA, carrying amount of INA before abnormal loss and dividend. Can I say? Bolo yes or no? Because already we have excluded dividend effect and abnormal loss effect. But can you say we should deduct dividend and abnormal loss? We should deduct now because we want carrying amount of INA after abnormal loss and after dividend. Because INA should be after dividend and after abnormal loss because that event is already occurred. Correct. My question to you all. We'll do minus abnormal loss. Minus abnormal loss from which period? Pre or post? So pre means on the date of acquisition, post means post. So from pre, I think in this though no doubt 6,000 will be deducted from this and from date of consolidation also. In this though no doubt. Any doubt? Abnormal loss no doubt. Can I say abnormal loss will be deducted after time adjustment as per the date of occurrence? As per the date of occurrence. In this any doubt? Hello. One second, doubt came, so I'll start from the beginning. Everyone listen carefully. Yeah? If you will not concentrate, I will also die, you will also die. Both will die. Now, once again I am saying, with this question I am explaining the entire concept. If you have any doubt, ask me, I will say. But if you will not concentrate, I will also die, you will also die. Correct? Okay. So unnecessary, the discussion will be what? Become lengthy. Unnecessary. One second. Can you see you have understood why we have written opening balance and closing balance on the date of acquisition? For the time being we have written, but some adjustment is required. Means this is not the balance on the date of acquisition. This is the balance on the opening date, but we have written for the time being because some adjustment is required. Then what I want to say, whatever difference means opening balance and closing balance minus opening balance is always profit after appropriation. Closing balance minus opening balance, closing balance of reserve and surplus minus opening balance reserve and surplus is always profit after appropriation. If you have done cash flow statement, in cash flow statement we used to do like this only. First closing balance minus opening balance, that was what? Profit after appropriation. Or let us prepare, if you have some basic doubt now, let us come to what this. Suppose let us prepare PL appropriation account. Better I will explain this way. PL appropriation account. But what is the opening balance? What is the opening balance? Arre bolo. 70,000. What is the closing balance? 1 lakh. How much dividend paid? Better I will say in this way. Final dividend how much? 30,000. Correct. How much profit transferred to general reserve during the year? The difference between general reserve is profit transferred to general reserve how much? 50,000. Correct. Understood this? But the balancing figure will be net profit transferred from PL account. So this is net profit transferred from which account? PL account. Na bachpan mein you have prepared PL appropriation account. If you remember, net profit. How much net profit? 1,10,000 na. That only I am saying. 1,10,000 is what? Net profit. So what we have done, check karenge. Dekho. 50 plus 30 is what? 50 plus 80. 80 plus 30 is what? So this become net profit. This is net profit earned during the period. Bolo yes or no? This is the net profit earned during the period. What happened? Have you understood what I am saying? Bolo. This is net profit earned during the period. Have you understood this? The objective is to find out net profit earned during the period, because time adjustment will be applied on net profit before dividend on the assumption that net profit is earned evenly throughout the period. So we can assume that net profit is earned. We can't assume profit after dividend has been earned evenly. That is wrong assumption. Once already I have said we need to take correct and rational assumption. Understood? Now have you understood this point? Please respond everyone. There will be no adjustment. General reserve question is silent. Automatically can I say this 50,000 is already adjusted? When I have taken the difference, 50,000 is already added to the net profit na. So 30,000 plus 50,000 plus 30,000 become net profit during the period. Understood this point? Once you will say yes sir, then only I will move. Everyone need to respond, huh? Chalo. Now, can you see this become net profit? But this net profit is after abnormal loss. So we need to find out net profit before abnormal loss. Why? Because we can't assume abnormal loss is spread over entire 12 months. That assumption will be once again wrong, because they have given abnormal loss occurred which period? In pre-period, we should only deduct abnormal loss from pre-period. Correct? Therefore, we have added abnormal loss also. And therefore we have added abnormal loss. So this become what? This become this. Now this become normal profit earned during the year. Correct. This become normal profit earned during 12 months. Bolo yes or no? So we can apply time ratio on normal profit earned during the 12 months. And therefore we have calculated this. So this total become what? Normal profit earned during the 12 months. Have you understood this point? So you can see we have applied time adjustment. Out of that normal profit earned, 3-month profit belong to what? Pre-period. And 9-month profit belong to what? Post-period. This adjustment you understood? This adjustment you understood? Correct. Yes sir. So then we deducted abnormal loss. I think in this to no doubt why we have deducted abnormal loss. Because abnormal loss happened during pre-period. Therefore deducted from pre-period. One doubt has been asked, sir, if insurance claim received in the next year. So can the insurance claim received in next year? In this year to not received? Ignore. Means they will give information about current year, na? They will not give information about next year. If received in next year, so accounted in next year, so forget it, because it is not recorded in current year. Question of adjustment will not arise in current year. So you will do adjustment of only those information which has been recorded in current year, na? Understood? Have you understood your doubt? Correct. Any doubt? Have you understood this PL appropriation account? I'm just deleting it. Now, doubt comes for dividend. Now, dividend will be deducted from pre-key post. Doubt will be here. So first I will ask you, what do you know? Minus, Nalayak, just try to understand. If suppose they have given 10,000 is abnormal loss and insurance claim not received in current year, so how much you have charged to PL? 10,000 only. So you will add back 10,000 only. How much you have deducted from PL? 10,000. If you have deducted 10,000, you will add how much? 10,000. Apply common sense. Right? This point, I don't think so. At CA final level, you should ask this point. Just try to understand. We are just adjusting the information which is already recorded. If insurance claim not yet received, so not yet recorded, so the question of adjustment will not arise only, na? Understood? Correct. Now got it? Yes, sir. Now, can you see we should also deduct final dividend? Final dividend or not? Bolo. We should deduct final dividend or not? Because we want INA after dividend. But the final dividend from which column? Pre-column, post-column. Normally student do mistake here. Pre or post? Pre or post? Pre or post? Pre. Pre, post. Someone is saying pre, someone is saying post. I'm waiting for live batch. Someone is saying post. Someone is saying pre in this also. Pre or post? Chalo. Let us understand. After my explanation, you will say correct. Just try to understand. This is what? 1/4/2015. This is 30th June 2015. This is 31st March 2016. Correct now? Understood? Now, just try to understand. In this chapter, whenever they have said final dividend paid, so of course, can I say final dividend is paid after acquisition only? If the date of payment is not given, because can I say final dividend paid by subsidiary company will be received by parent company. So in this question, even though date of payment is not given, we'll always assume it is paid after acquisition. However, in exam, because this question I have created, I forgot to give the date. In exam, they will give the date, and the date will be what? After acquisition. Means this is paid after acquisition, but declared from which profit? Previous year profit. Previous year profit, na? Bolo. Means what they want to say? The dividend is paid out of pre-acquisition profit. Out of pre-acquisition profit, but paid after acquisition. My question to you all, if you know accounting of dividend, the journal entry of this will be done on which date? It will be done in previous year or current year? Current year. What journal entry you will do? On this date you will do journal entry what? Final dividend account debit to bank. And then what? Retained earning account debit to final dividend. This journal entry. Means can I say we record dividend and we pay dividend on the date, means in the year in which it is declared and paid. You only say the objective is to find out INA on this date, but whether any dividend paid On the date of acquisition, any dividend paid. On the date of acquisition, any dividend paid. So whether your net asset will change. Whether your net asset will change. The objective is to find out net asset on the date of acquisition. So if you have not done any payment or dividend, whether your cash will decrease. Your cash will decrease after what? Payment, means after date of acquisition, means it will affect what? Net asset during post acquisition period. Just try to understand, it is declared out of previous year profit but paid after acquisition, therefore final dividend will be deducted from what? If suppose they have given it is declared and paid before acquisition, but they will not say. Suppose dividend has been paid during this period, then can I say your INA will decrease? But question, in this chapter always this dividend paid will be after acquisition, and always I will say 99% it will be deducted from post only. Understood? I hope you understand why we are deducting from post. Have you understood this point? Why we are deducting from post? Everyone respond. I am waiting because I don't know what you have done with other faculty, what format you have used. Therefore, I am very much slow in this discussion. Have you understood? So can the objective is to find out INA on the date of acquisition. So can I say, if you have not paid dividend, so your INA will not decrease on this date now. It will decrease during post period. So deduct from what? Post period. How much you will deduct? How much will deduct? 30,000. So can 30,000 will deducted from this. Have you understood this point? Correct. This become what? No, this is carrying amount, huh? It's not fair value. This 49,000 minus 500, 49,500 minus 30,000 is how much? 19,500. This is 37,500. This is how much? Abnormal loss we have deducted now. Already deducted. 4 lakh. It should be 4,70,000. What mistake we are doing? Oh, this is 4 lakh. 13,000 then. That is 4 lakh. Understood why I have understood this 4,70,000? Because these and this will always match. So I have cross-checked it and I have found out my mistake. So in exam you should be smart to understand where you are doing mistake. So any human can do mistake, but we human have an ability to cross-check. This is the difference between human and animal. Everyone do mistake. Animal also do mistake. Human also do mistake. But animal does not have the ability to cross-check. We human being have the ability to cross-check. Understood? This is the difference between human and animal. So we are human or animal? We are worst animal, huh? We are worst animal, I say. Bolo. This much you understood? If any doubt, please once again ask me, because once I proceed, I will not discuss these all points. Because if Sona is correct, your consolidation is correct. If Sona is wrong, your entire consolidation balance it will never tally. So I am just giving some time to you so that you don't do mistake in exam. Now my question to you all, can you say this is carrying amount or fair value? Carrying amount. So this is carrying amount of INA of subsidiary company. Correct? But we want what? Fair value. Therefore we'll do what? Plus minus fair value adjustment. Plus minus fair value adjustment. For that one more working note is required. This you have understood? Correct. So we'll do one more working note. That working note is known as what? Fair value adjustment. So working note we'll do fair value adjustment. Normally student do mistake here. I don't know why, but normally student do mistake in this. I don't know why. So can you say देखो डाउट पे डाउट आ रहा है. What is point number 3? Read. During the year dividend paid. During the year dividend was paid. Where it is given, it is paid in previous year. During the year dividend paid means current year dividend paid. In question, what is the doubt? In question it is specified dividend paid. Paid not Ray. During the year dividend paid. During the year dividend was paid. From where? From pre-acquisition profit. Of course, final dividend will be declared from previous year profit only. That is common sense. But paid in what? Paid in what? After approval of shareholders in annual general meeting. Well, if you know Companies Act. So it is always declared from which profit? Previous year profit. That previous year profit in this chapter will be pre-acquisition profit. Because that is profit earned before acquisition. Therefore, they have said from is pre-acquisition profit. But paid when? During current year. So I said because date is not given, always assume after acquisition. There is some general assumption that you need to apply. So you can't assume it is paid before acquisition. And understood it is paid in current year only. It is paid in current year, but from which year profit? Previous year profit. Understood, sir. That too I was saying previously also. Understood. Therefore, I am giving time. Because I know where you can do mistake. Now have you understood? Everyone respond. Those who are listening the class, everyone respond. Raise your hand. Then only I will proceed. Because once again I will proceed, you will ask me that doubt. I need to come back again. So everyone who is listening live class, please, because I have 2 WhatsApp group, I need to cross check 2 WhatsApp group. Please. Everyone raise. I will not proceed only now. Job. Those who are listening. I said raise your hand. You are showing smiley. Wow. Very good. You also raise your hand. Chalo. I think most of them have understood. But I will wait. Chalo. Can I proceed now? Can I proceed now? Chalo. Can I proceed? Yes, sir. We can proceed. Now, fair value adjustment. So I was saying that whatever we have calculated till now, that is carrying amount of INA, but we want fair value of INA. Normally students do mistake in this. I don't know why. You can see it means what? We should take fair value because they have given only adjustment for PP. Means we'll assume other asset, fair value and book value are same. Therefore, no adjustment for other asset. Only we do adjustment for PP. What is the fair value of PP on the date of acquisition? How much given? 3 lakh. From where you get 3 lakh? I'm asking fair value. You are giving book value. Lack of concentration. Dekho, just try to understand. If you can't concentrate in class, how can you concentrate in exam hall? Just give me one thing. You need to concentrate. Don't think about other people right now. Don't think about. Please concentrate. Please concentrate. Please. First, I don't have answer. I am dependent on you. Correct na? Or I should bring a solution also with me. 4 lakh. I don't have question also. Is not in hard copy. 4 lakh. Now can you see you need to compare with what? Book value of PP on which date? Means if you need to compare fair value with book value on which date? Date of acquisition only. What is the date of acquisition? 30th June 2015. 30th June 2015. Where the book value has been given on the date of acquisition. Not given. Means either you leave or you do. What you will do? You need to calculate book value. How you will calculate? Batao. Now because they have given 3 lakh as on closing date. So can we assume this is after depreciation? After depreciation means what? After 10% means this is 90% of opening balance. So we can find out opening balance. So what is the opening balance? Can you give me how much is the book value as on 1/4/2015? So this will be 3 lakh divided by what? 90%. Bolo yes or no? 3 lakh divided by 90%, how much? It will be 3,33,333. But we want on which date? On 30th June. So from this we should deduct what? Depreciation for pre-period 3 months. This is pre-period now. This is pre-period. So depreciation will be what? 3,33,333 into what? 10% into what? 3/12 is coming how much? 8,333. How much it is coming? 3,25,000. Any doubt in this? So can you say this become what? Increase in PP on the date of acquisition? Bole yes or no? How much increase? 75,000. It means on the date of acquisition increase PP by how much? So it means INA will increase on the date of acquisition by how much? So it means this should be added in which column? So this should be added in this column or not? 75,000. Correct? Understood? Means can I say in the books of parent company, now PP will come at fair value on the date of acquisition. In the books of parent company, in the consolidated books of parent company, PP will be recognized at fair value. Means at rupees 4 lakh. 4 lakh was the fair value na, of PP. So on the date of acquisition, parent company will recognize PP at 4 lakh. So now they will charge depreciation on 4 lakh or what? So now can I say during subsequent period, post acquisition period, parent company will charge depreciation on 4 lakh, but subsidiary company has already charged depreciation on original book value for 9 months. It means can I say there will be some additional depreciation due to this fair value adjustment during post acquisition period. That additional depreciation will reduce profit of post acquisition period. So can I say we need to also reduce some profit of post acquisition period due to this fair value adjustment. Understood? It means can I say we need to find out what will be the additional depreciation. Additional depreciation. So can I say we need to find out less additional depreciation during which period? During post period means how many months? 9 months. Okay. It means can I say now parent company will charge depreciation on which value? Fair value? Depreciation on fair value? Fair value means what? 4 lakh into what? Into what? 9/12. How much? 30,000. And can I say subsidiary company already charged depreciation on book value? Book value means which book value? Opening balance book value. Huh? So what was the opening balance? Into what? 10%. Into what? 9 by 12 how much? 25,000. So what is the additional depreciation? 5,000. Understood. So this become net increase. This is net increase on which date? On the date of consolidation. 75 minus 5 how much? 75 minus 5 how much? 70,000. Have you understood this point? I don't know why students do mistake here. Have you understood? I will explain 10 times till you understand. Because I know the importance of this SONA. If this is wrong, whatever you are doing after this, not at all important. Why? Because this SONA is wrong. So all other working note is dependent on SONA. So your all other working note with consolidated balance will be wrong. So your marks become 60 marks become 2 marks. Because they will say kata, 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 kata. Because it will affect every working note. Therefore, I'll give some time. 1 second. Have you understood this 75,000? Now what I want to say, just try to understand. Let us understand this way. What was the opening balance in the books of subsidiary company? It was 3 lakh. And they have already charged depreciation for how many months? 12 months. So 3 lakh 33,333 into 10% how much? And what is the closing balance coming? This is coming in the balance sheet of subsidiary company. This account you understood? Out of this 3 months is pre-period. 9 months is what? Post-period. So into 3 by 12 how much? That already we calculated. And this is what? 25,000. Means how much depreciation already charged by subsidiary company? 25,000. Means this depreciation is already charged by subsidiary company in their financial statement. Means their profit is already calculated after charging this much depreciation. Means whatever post acquisition profit we have calculated right now, that is after deducting this profit. After deducting this depreciation, 25,000 depreciation. But now parent company on the date of acquisition, they have purchased the asset at what? 4 lakh. Now they will include, this will become opening balance of this. This will become purchase price of this asset in the books of parent company. Now they will charge depreciation for 9 months. On what value? 4 lakh. So now they will charge depreciation on 4 lakh, means 40,000. Sorry, for 9 months. 9 months how much? So they will charge depreciation for 9 months 30,000. But already how much charge? So how much we should increase? 5,000. So we should give only the effect of 5,000 now, because out of 30,000, 25,000 already charged by subsidiary company. So how much parent company should additionally charge? 5,000. Understood? Now have you understood this point? This calculation? Means can we do in this way? Now you have understood though. We'll say 4 lakh minus 3,33,333 into 10% into 9 by 12. We can do in this way also. Same answer will come, right? This is mathematics. This is common out, common out. Or you are cross checking. Same answer will come. Same answer will come now. So you can do in this way. Additional depreciation is equal to fair value minus book value into what? 10% into what? But normally I have seen student will do mistake yahan par. This will be always opening balance. But I have seen student take which value, you know? They will say, they will take this value. Maja aa raha hai. They will say this value. Value? No, they will not take 3 lakh. They will take this value. They will take 3,25,000. 4 lakh minus 3,25,000. I have given one shortcut na. 4 lakh minus 3,33,333. Now they will apply shortcut. They will take this minus this. Maja aa raha hai. But this not. Just try to understand subsidiary company has charged depreciation on opening balance. Not on the balance on the date of acquisition. Are you able to understand what I am saying? This is super danger. Just you know, but can you apply? You will apply only you have understood why we have taken this. Have you understood this point? Danger, super danger. This much you understood? This much you understood? Please respond. Yes, sir. It means now, can I say we write down what? 5,000 plus ki minus? Minus. So this will become 70,000. So now this become 4,13,000 minus 75. Sorry, plus 70. 4,13,000 plus 75. How much? 4,88,000. This is 19,500 minus 5,000. How much? 14,500. This is 37,500. This is 4,70,000 plus 70,000. How much? 5,40,000. Correct. Understood? Can I say this become profit of which company? This become profit of which company? This is the profit of which company? Follow the subsidiary company. I will say, I am asking something to you. Please respond. Otherwise I will go. Today I will go. Please respond. Okay? I will go. I am asking you means you need to respond. Either respond wrong, that is okay. Okay? Because I just want to know whether you are understanding or not. Or I will teach and go. I will taking a lot of pressure. Lot of effort I am taking. I can teach and go also. Because my objective is to only provide you what? Concept. Even though you understood, you don't understood, that is not my objective. Okay? But I am just taking my effort that whether you are understanding or not. If you are not respond, I will not be able to understand whether you are. Then there is, what is the use of coming in the class? Better you also take live class. If you are coming in the face-to-face class, it means you need to respond na. Otherwise you sit in your home, I am here, maja aayega. Please respond. I already said it at the beginning, this chapter is difficult when I teach in crash batch because I don't know the level of yours. What is your level that I don't know? Beginning se maja aata hai. Because in that I assume that you know you don't know anything. Okay? 1 second. But this is the profit of which company? During which period? Attributable to whom? Parent company and NCI. Bolo yes or no? So this should be allocated to parent company and NCI. What is the ratio? Ratio is 70% and 30%. 70% how much? 14,500 into 70%, 10,150 minus equal to 4,350, and this is 37,500 into 70%, 26,250. Correct? Minus equal to 11,250. Now this will go to NCI and this will go to other equity of parent company. This will go to PL and this will go to general reserve. Understood? Have you understood? Can I say if Sona is wrong, this is wrong, this is wrong, the other account is wrong? Correct? This much if you have understood, now I can proceed if you allow me. But before that, once again I am asking, have you understood this fair value adjustment? Because normally students do mistake in this. Now, suppose in this question they would have said SLM method. Suppose if they would have said SLM method. In this question they have said RBM, so we have applied RBM. But if they have suppose said SLM, so how to calculate additional depreciation? Additional depreciation calculation will change. So what was the increase on the date of acquisition? That will remain same. The increase on the date of acquisition was how much? So increase on the date of acquisition was 75,000. Correct? That will remain same. minus additional depreciation. If it is SLM means, can I say cost? 10% should be applied on cost now. So it means it will be 75,000 into what? 10% into what? 9 by 12. How much? 5,625. Means if it is SLM, so directly calculate on this amount. Directly calculate on this amount. Understood? Have you understood this point? Correct. So this will be the net increase. This area where I have seen student do mistake. RBM understood? SLM understood? SLM is easy na? SLM if I would have done, so no doubt would have come. 75,000 maja aa raha hai sir. Now one doubt, suppose question is silent. So SLM or RBM? How many are saying SLM? Raise your hand. How many are going for? If question is silent, suppose in this question is silent. SLM, RBM. Respond. Let's see what you have done. How many are saying SLM? How many are saying RBM? Maximum one is saying RBM. And RBM is correct. RBM is correct. If question is silent, always apply RBM. If you have done SLM, that is wrong. Your assumption is wrong. Why? Just try to understand whether in this question they have given opening cost price. They have not given cost price. It means to apply SLM, we have assumed opening balance cost price. That is wrong assumption, na? Just try to understand. If they said SLM, we don't have any other option. But if question is silent, we want cost price for SLM. Whether they have given cost price or PP, they have not given. Opening balance is not cost price. And if you are assuming SLM, that become wrong assumption. And for wrong assumption, 0 marks. Understood? So if you are applying SLM, that is 100% wrong. Your assumption, your solution as per your assumption is correct. But your assumption is only wrong. Whether they will give marks? Anda marks. Normally we don't understand whether our assumption is correct or not. Just try to understand. If your assumption is not correct, so your solution is also not correct. Your assumption should be rational assumption, not any assumption. Are you able to understand what I am saying? Your assumption should be a rational assumption, not any assumption. And normally we can't understand that point. We think that our assumptions, sir, we have done solution as per this assumption, we should be given marks. Same example, lease. In AS 116 I have said question is silent, payable at the end, payable at the beginning. You have done solution as per payable at the end, but I will say wrong assumption. Payable at the beginning, apply. Apply payable at the beginning. That is rational assumption. That is rational assumption. Are you able to understand what I am saying? Oh, now we have understood everything about this concept. So can you say we have done abnormal loss adjustment? We have done what? Final dividend adjustment. We have done what? Fair value adjustment. We have done error adjustment. I have explained you, but error adjustment you can apply as per the information given in the question, because I don't know what error they will provide. But error so you can rectify na. But normally they don't give error. I don't know why. Correct. Now after this, we'll prepare. Working note number 1 was Sona. Working note number 2 was what? Working note number 2 was what? Fair value adjustment. Working note number 3 will be what? Goodwill. Additional depreciation on SLM. Again repeat. Once again I will repeat. Additional depreciation on SLM will be calculated on this increase only. Because can I say, just try to understand, when I am saying cost price, so this will be added to the cost price, and additional depreciation will be affected on this only. When I am saying RBM, so the rate is applied on closing balance, means WDB. When I am saying SLM, the rate is applied on cost price. SLM rate of depreciation is based on cost price, RBM rate of depreciation is based on WDB. Therefore, on this tokenage, this 75,000 will increase the cost price only. Cost price. So, charge depreciation on this simple. I think no explanation required. SLM is more easy. But what I want to say, in this question, if they specify SLM, okay. But if you don't specify, can you assume SLM? No. You need to do by RBM only. Understood now? Understood now? Now, coming to working note number 3. Yes, the working note number 3 will be goodwill or gain on bargain purchase. The formula apply. Formula is what? Fair value of consideration paid. How much? How much? I will check it, Baba. 2,70,000. Correct. Yeah, this is for how much percentage? Now, whether fair value of NCI information is given, whether fair value of NCI information is given, we will apply which method? What Narayak? Pasina method. Pasina method. Pasina, we want fair value of INA. Already we calculated fair value of INA on the date of acquisition. How much we calculated fair value of INA on the date of acquisition? How much we calculated? 4,88,000. This is fair value of INA on the date of acquisition. We want this only. So 4,88,000 into what? Into 20%. It is 30% na? How much? Total is what? Minus what? How much? Goodwill or gain? Gain on bargain purchase, how much? This will be transferred to what? Understood. The next working note will be working note number 4. We'll prepare for other equity and NCI. Other equity and NCI. So we have other equity, PL, general reserve and NCI. For PL and general reserve, first we write on balance, closing balance of parent company. Can you give me the closing balance of parent company? Two lakh and 1 lakh. And NCI we write on initial value. What was the initial value? We already calculated from this. 1,46,400. 1,46,400. Understood this point? Correct. Now in this we'll add what? Profit of subsidiary company. Already we calculated profit of subsidiary company. So how much will be transferred? This will be transferred. Can I say this will be transferred to PL? Correct? How much will be transferred to general reserve? This will be transferred to PL. This will be transferred to general reserve. And this will be transferred to what? NCI. Can you write down and can you inform me? You have written this? The how much? 10,000, 10,150, 26. What is the total of this? Total how much? What was the fair value on the date of consolidation? What was the, INA on the date of consolidation? On the date of consolidation, I'm asking. 5,40,000? 5,40,000. 5,40,000 na? Into 30% how much? Cross check, we are doing correct. Cross check means bata we have full goodwill or partial goodwill? Full goodwill or partial goodwill? We calculated full goodwill ki partial goodwill? Pasina method or fair value method? Pasina method, full goodwill, partial goodwill. So in case of partial goodwill, NCI will be proportionate share only in INA, and therefore we have not added goodwill, because that goodwill only belong to parent company. Goodwill of subsidiary company belong to what? Parent company. Huh? So only we have taken 5,40,000. This is excluding goodwill into 30%. Same is coming. Understood the concept? Cross check, huh? Cross check whether you are doing correct or wrong. Have you understood? Now we can prepare balance sheet. CBS. I am doing only without heading, huh? But how much property, plant and equipment? The formula is what? Book value plus minus adjustment. Formula is very easy. Book value plus minus adjustment. What is the formula? Book value plus minus adjustment. What is the formula? So can you give me PP? Plus how much? 70,000 on the date of consolidation. Na? Take, we know it is 70,000. This become what? 7 lakh. Goodwill is not appearing. Then other what? Current asset. Book value plus book value how much? 2 lakh plus how much? I think no other item will come. How much? Equity share capital only of parent company. Equity share capital of parent company will come or both will come? Only we are taking INA, we are not taking equity and reserve and surplus. Huh? This is also area where student mistake, bhavuk ho jate hain. They become emotionally affected. Consolidation, let us consolidate plus. Maja aa raha hai. Then we write on what? Other equity. In other equity, PL will come. PL as per working note. You have not done with me. But so lazy you are. So I am writing everything, you are not writing. This is laziness. You know, this is laziness. Auditing. You think this is laziness. I am writing everything, you are not writing. This is laziness. I became CA. Huh? I became CA in the year 2005. November 2005 exam. Result came in Jain. I celebrated. Understood? I am earning a lot of money. And I am writing because this is my profession. But you should write because you are a student. You are not writing. I don't understand why you are not writing. I don't understand. You are a student, Baba. You should write down everything. If I am writing, you should also write or not. This is CA final student actually. CA inter, you will never do like this. CA final mein aate na, you think you are chartered accountant. You are more than chartered accountant. You think. Are bola re, I am right. Once you intend to CA final na, you think you became CA. Right. Other equity. PL how much? 2,10,150 plus general reserve 1,26,500 plus gain on bargain purchase. Oh. This is correct na both? 71,600. This is you have given wrong, I think so. 1,26,250 it is. You have said 250 only. Okay, my mistake. Plus what? 71,600 total. Four lakh 8,000. Now this become in when we prepare proper balance sheet, so this become equity attributable to whom? To parent company. How much? And in this we add what? NCI is how much? 1,62,000. Yes, this become total equity. This become total equity. How much? Then we'll add other liability, current liability. How much? 1 lakh. Total. Balance sheet tallied. Can I say balance sheet will be easy once you have done SONA correctly? Only SONA is what? SONA. If you understand SONA, then it is okay. If you do not understand SONA, then there is a problem. And one mistake in SONA will affect entire solution. But I have taken my time to explain you the entire concept. I hope you have understood. We'll take some question, good question. Now, this was the lollipop question. Huh? This question will not come in exam. Huh? Now, right now, without dealing with any other concept, I can take one question which have been asked 2 times in exam. Means this much concept, 2 times that question have been asked. However, I will take one more question which have been asked in exam. See, I can take 2 questions. Means this much you have done now. Out of 6 exam, they have asked 3 times this much only. Which we are not supposed to read now after that. However, this is only 20%. 80% is left. Are you able to understand what I am saying? 20%, 80% is left. So 20% you have done, 3 times they have asked this much only. Can we take that question? Without going to any other concept, I am taking one question. Let us come to that question. You have done that question, I know. Question 31. Can we take? Ram acquired 60% of ordinary shares of 100 each of Krishna Limited on 1st October 2001. This date is relevant. Always Gola. Gola whenever any date is relevant. Huh? On 31st March. Okay. Property, plant and equipment, land and building, plant and machinery, investment, inventory, financial asset, trade receivable, equity and liability, you can read. The retained earning of Krishna Limited showed a credit balance of 60,000 on 1st April. Opening balance given. Out of which dividend of 10% was paid on 1st November. It was paid on which date? Out of which profit? Means declared from pre-acquisition profit, paid after. Student do not able to understand this information only. Acha bola paid out of 60,000, deduct from 60,000. That is wrong. Have you understood this point? Are you able to understand? Ram Limited has credited a dividend received to retained earning. It is Ram Limited holding company, when dividend received, that dividend received will be transferred to what? PL only. So thank you very much. Yeah, this is Bakwas point. This is Bakwas point. Yes, from PL it will go to retained earning only, na? This is Bakwas point, you can ignore. They have given only to think. Now when they have given this point, you will think, na? You will think. Think na. You will die. Again, dividend received by holding company will be credited to PL as per India's 27 separate financial statement. Ind AS 27 is there. Ind AS 27 para 12 says that it will be credited to what? PL account. It is credited returning. Okay, this is not an error. This is not an error. Understood? This point have you understood? Fair value of plant and machinery on 1st October. Date of acquisition 4 lakh. The rate of depreciation of plant and machinery 10%. Nothing is given. SLM RBM. Believe me, in one of the exam, my student, I said in my regular class, I will shout and say RBM, 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 RBM. In class batch I am saying so deeply, to in regular batch, so you can understand how much time I will say. One student has done SLM. After saying so much, in exam, nahi chalta. SLM, he has given me the question paper as answer because he has called the answer paper. I was just cross checking. Correct. Everything was correct. Super answer. Only SLM they have taken. 60 marks. Only 5 marks was given. Only 5 marks. 11 marks difference. Aggregate nahi hua. Attempt lost. Because of that one mistake, 6-month gap. Understood what I am saying? And I have said SLM is wrong assumption. You can't take SLM, huh? You can't take SLM. Understood? Until they inform you SLM. Got it? Correct? So that you need to understand. Normally what happens, we don't understand why we are applying RBM. We don't understand why we are applying RBM. I have given the reason why we are applying RBM. Because cost price is not given. You can't apply SLM. Following are the changes in fair value. Achha, what is the meaning of changes in fair value? Changes in fair value means what? Changes in fair value means what? Increase or decrease? So can I say increase or decrease is given for the following assets and liability. Thank you very much. As per respective Ind AS from the books on 1st October 2001 means date of acquisition, which is to be considered while consolidating the balance sheet. Means land and building they have given what? Changes. Increase is given only. But for plant and machinery they have not given increase. For land and building they have given increase. For inventory they have given increase. And for trade payable also they have given increase or decrease? Increase. If the amount is written in positive, it means what? Increase. If the amount is given negative, means what? Decrease. That is understood point. It may be assumed that inventory is still unsold on the balance sheet date and the trade payable are not yet settled. Also assume other reserve as on 31st March 2002 are same opening balance. I have already said this is general assumption. In this question, though they have mentioned it, even though not mentioned, we'll assume this only. So these two are actually general assumption. Now only I need to explain this point number 1 in this. If suppose other assumption is given. Here is the point number 2 to understood. Previous CBS. Can we start? Now, you will see if you have understood, you will be able to follow. Correct now. Always start with my suggestion with fair value adjustment. Because the effect of fair value will go where? In SONA. So first prepare fair value adjustment. What are the assets given for fair value? Can I say plant and machinery? Then what? Land and building? Then what? Inventory? Then what? Trade payable. So we want fair value on the date of acquisition and then we'll compare with what? Book value on the date of acquisition. Yeah, this will be changes only. This will be increase or decrease now. So for this, so they have given only now. This is given, this is given, this is given. So do you want this information? You don't want this information? Bolo yes or no? In this also student do mistake. I don't know why. I don't know why they do mistake. But can they have given changes? Changes how much given? 2 lakh 30,000 20,000. Thank you very much. But this is not given, so we need to calculate it. What is the fair value given? We want book value. Book value on the date of acquisition given? Not given. So we need to first find out opening balance. Opening balance is given. Opening balance is not given. So we need to recompute the opening balance. So closing balance is given. How much closing balance of PP given? PP, not plant MST, na? 2 lakh 70,000. Correct, na? Concentrate, huh? Concentrate. So 2,70,000, what you will do? Divide by what? What is the rate of depreciation? So 90%. It is coming how much? 3 lakh. So we can add on 3 lakh. Very good. I was just cross checking whether you are concentrating or not. This 3 lakh is opening balance, but we want on the date of acquisition. Correct now? Full concentration required. Very simple, but then also full concentration. Minus how many month depreciation? What is the date of acquisition? October. 1st October. 6 month. So minus 6 month depreciation. It will be how much? 15,000. So this become 2 lakh 85,000. So this become what? 1 lakh 15,000. Understood? Have you understood this? Now from this we'll deduct additional depreciation. Additional depreciation. You will calculate additional depreciation for plant and machinery. I will not calculate. Additional depreciation for post period. Post period is what? 6 months. So can you calculate additional depreciation? For plant and machinery, you do. Bolo. One answer I got 20,000. I don't know whether it is correct or wrong. What is the fair value? What is the opening balance? 3 lakh, na? Into what? Into what? How much it is coming? 5,000. How much you have? What you have said? 20,000 is not correct. Why you are saying 20,000? How 20,000 came? Achha, you have given on 4 lakh. What you have given? Everyone given 5,000? Have you understood this? Everyone. Once again I am asking. I already said you are saying 20,000. Correct now. Have you understood or not? One mistake, 10 marks lost. I am waiting for you. Have you understood or not? No response only. No, I am asking from live batch. This much you understood? Correct. So what is the net amount? 1,10,000. Now let us come to other asset. Plant and machinery you understood? Now land and building. If you see land and building, land component is not depreciable. Building component is depreciable. And they have not given rate of depreciation. The rate of depreciation given So we will calculate additional depreciation. So in this question, because rate of depreciation is not given for land and building, we'll assume this increase is entirely for land portion. That is our general assumption. I will say whenever rate of depreciation is not given, ignore. You can't assume rate of depreciation in exam. If they have not given, ignore. So whenever rate of depreciation is not given, ignore additional depreciation. You will ignore it. Why we have ignored it? Rate of depreciation given. Or we can assume this 2 lakh is entirely for what? Land portion. And land portion is what? Not a depreciable asset. Therefore this will remain 2 lakh only. Correct. For inventory they said unsold. So can I say if it is unsold, so whatever was in the date of acquisition will remain in what date of consolidation? So no effect, because it is unsold. Unsold. Unsold means whatever you have done increase, that will remain in closing balance also. Therefore no adjustment. And they have given trade payable remain unsettled. So this remain the part of closing balance. Therefore no adjustment. Correct. This question though you have understood. But I need to just explain you if sold what need to be done, if paid what need to be done. That I need to explain. But if question is silent, always assume. If question is silent, always general assumption, unsold, unpaid. This is land portion. This is general assumption. Whenever question is silent, then this is appreciation in land. Whenever question is silent, this is what? Unsold. Whenever question is silent, unpaid. Unpaid. Understood? This is general assumption. You can't assume other way round. Have you understood this point? Now if sold given, then what need to be done? I will explain at the end. But batao, simple or complicate? Simple or complicate? Simple or complicate? Simple only. If you do calculation correctly, huh? Right. Now we'll come to what? Sona. Working note number 2, Sona. In exam, don't write Sona. Otherwise, they will also give you Sona. Understood? Write down exam full statement of net asset of which company. But we start with date of acquisition, date of consolidation, and post. Correct. Date of acquisition is what? 1/10/2001. This is 31st March 2002. This is 6 months. Can you give me equity share capital? Give me correct amount, huh? Equity share capital of which company? 4 lakh. 4 lakh. Can you give me retained earning opening balance? Closing balance. Closing balance 1,64,000. Difference. General reserve. Opening balance not given. Closing balance is what? We'll assume what? However, it is given also. Given also same. So no changes. Have you understood this? Total. Now in exam, now after this, think about 3 items. Whether any abnormal loss in this question. First thing, no. Whether any dividend? Yes. Only one adjustment and then also saying no. So KNSE will do plus what? Final dividend paid at what rate? 10% of what? 4 lakh. We'll do plus 40,000. Plus 40,000. Any error? No. So only one adjustment. 6,60,000. 1,44,000. 8 lakh. 8 lakh. 4,000 na. 8 lakh 4,000. Correct. Now we'll apply what? Plus minus time adjustment. Time adjustment na. Time adjustment first, huh? For how many months? We'll do 6 by 12. It is 72,000. This will be added here. Par. Are you able to follow? 7,32,000. 72,000. Then minus what? Final dividend. But from pre ki post. Post how much? Seven lakh. Just cross check whether it is correct or not. Because 7,64,000. You can cross check now. Then we'll do what? Plus minus. Can you give me one by one? First we write on what? Plant and machinery. But how much increase? Then how much additional depreciation? What is the net amount? Then what? Land and how much increase? How much additional? How much inventory? How much additional? How much trade payable? Increase will be deducted. Minus how much? Whether it is complicated. This is coming how much? Ten lakh 57,000. 32 minus 5. How much? 27,000. Then done. However, if you have done any mistake in last column, that will not affect your solution. If you have done mistake here, then only your solution will be affected. The last column is only for the total. But this, if you have done mistake here now, then it is dangerous. Last column totaling mistake also, if you done, it will not affect solution. But don't do. Why you will do mistake? Correct. Now working note number what? Goodwill or gain on bargain purchase. How much? Fair value of consideration paid. How much? For how much percentage? How much? Then fair value of pasina method. Fair value method, pasina method. First I am asking some question. Fair value method, pasina method. Pasina method. Why? No information about fair value method. Always apply pasina method. Correct. Freedom what? Value of NCI by using how much percent is required? 40%. What is the fair value of INA we calculated? Yeah. From where you get 320? Now from where you get? This is not mistake. This is suicide. Not mistake, huh? Not mistake. Suicide. Once again, concentrate. 10,57,000 into 40%, how much? 4,20,20 total. Minus what? How much goodwill? Correct. Understood. Simple, na? For a full goodwill, partial goodwill. In exam, always write down full or partial. Correct? In exam, write down full or partial. Then working note number 4. What we'll do? In suggested solution, they have done other equity separately, NCI separately. If you want to do that, you can do that also. But can I say wastage of time? Wastage of time, na? And for this presentation, they will not deduct marks. Why they will deduct marks? This is working note. For working note, there is no format. Balance sheet, there is a format. If you change the balance sheet format, they should deduct marks. But working note is as for our comfort level, na? And we are giving all information properly. So working note, there is no presentation. There is no format for that. But I'm just informing ICAI is doing other equity separately, NCI separately. Your choice, you can also do separately. So what we have? Retained earning, general reserve. So can you give me first balance of these two from parent company balance sheet? 1 lakh. General reserve. NCI what will take? Initial value. This value. This value, na? Always think about this value, huh? 4,22,000. Are you able to understand what I am doing? Now, plus what? Profit of which company? Okay. So there is only which column? PL column. Retained and general reserve was 0 only. Post acquisition period, this will be 0. What a profit came? Can you allocate in which ratio? How much profit came? Allocate this. 60. Huh? Then can you give? $4,33,000. 1,30,000. Understood. Acha. Can we present this like this? Or I'm giving you other presentation, na? Or balance how much? Now plus, okay, this profit is after dividend. So can you give me first share in PL before dividend? What is the profit we calculated? Means we calculated how 16,200. In this we can add what? Dividend is how much? We can add this. So we can allocate this in 60:40 ratio allocate. $22,000. And then can I say minus dividend received by both the party, dividend received by parent and NCI. So we can say dividend paid become dividend received. So minus dividend received. How much dividend received? 40,000. Can you allocate? Whether answer will change or answer remain same? Same only now. ICAI using this, so you can also use this. ICAI is doing in this way. If you want to follow this, or if you, I'm just informing because sometimes we refer suggested solution. So you will think, acha, why, what is this? Ore baba, baba, sir is teaching wrong. Therefore, I am informing you. Huh? Your previous teacher might have given in this way. Might have given this way. I am just informing you, both are same only, na? This is working note, na? Working note we can do in any way. This is working note or not? So we can do in this way or this way. The objective is to calculate the answer, na? We are calculating. Same answer will come. So this statement, this way ICAI is doing. If you want to do in this way, you can follow ICAI solution. Your choice. Understood? Have you understood? Correct. Let us prepare what? CBS. That is the important. Because you will get marks per what? CBS. What is the formula? Formula is what? Book value plus minus adjustment. So can you give me first property, plant and equipment? Give me what? Total PP. Means you give me these two. This plus this plus this. 7,80,000 plus adjustment. How much plant and machinery adjustment? How much land and building adjustment? Understood what I am doing? Total. Goodwill. Then what are the other item given? Inventory means current asset, no? Huh? Inventory. Book value plus minus adjustment. 2 lakh plus 70 plus how much? Trade receivable means financial asset. Format, you know, I am not giving a format. You should prepare in format, huh? If you are not preparing format, I will to never deduct. I will never give marks if I am checking your paper. I don't know about them. I will not give marks. Correct? Understood? Batao. Trade receivable plus any adjustment. How much? Then cash and cash equivalent. बताओ. Total. You are not writing. Now let us come to what? Equity share capital how much? Only parent company, huh? Then other equity. But the PL how much? 1 lakh. General reserve. Any gain on bargain purchase. This become how much? Then we'll add it. That you can do. Then add on NCI after this. How much? Then can you give me other liabilities? One lakh total. Then book value plus book value. Minus not. That is increase. In Sona we have done decrease. Increase in liability will reduce your net asset. Increase in liability will reduce your net asset. How much? Plus na. How much? 1 lakh. Balance it will tally. Tallied. Don't say yes. Tally it. So बताओ whether it is complicated. You only say. And this question have been asked 2 times in exam. They will again ask this question only. Same question they will ask. What do you think? This question if they are asking in exam, this is easy question, complicated question. Till now we have done only 20 to 25% of content. अभी तो पूरा balance is बाकी. They are not asking advanced concept, believe me. Only one point I will add to one question, beautiful question they have asked, that also is like this only. That was but good question. But only one point I need to add. Impairment of goodwill. But have you understood this? Correct. Let us come to the concept. Concept number 2 you understood? Statement of net asset. I'll come. I'll now come with concept. Let me inform you how much concept I have done. Concept number 2 I have done statement of net asset. So I said we'll use equity approach. Why? Because they will not provide information about. If they provide information on net asset on date of acquisition, we can use that also, but they will not provide. Then we need to apply time adjustment if shares are acquired during the year. If shares are acquired during the year, if shares are acquired at the beginning of the year, no time adjustment required. And time adjustment is applied on the assumption that profit is earned evenly throughout the year. Suppose they have given profit of pre and post separately. So okay, then time adjustment we are not supposed to apply. If they have given this much profit belong to pre period, this much profit belong to post period, thank you very much. Then don't apply time adjustment. Then they have given actual information. Are you getting what I am saying? Abnormal loss, you understood? Dividend declared and paid by subsidiary company, you understood? Now, one point. Suppose in the question they have given declared, suppose they have given dividend declared by parent company 10%. What you will do? Will not do nothing. Means, dividend declared by parent 10% they have given. Nothing in anywhere. Dividend declared by parent company during the year. Suppose they have given this information. What will do in entire consolidation? Nothing. Thank you very much. Good. Means can I say dividend declared and recorded? Because declared to recorded also. So no adjustment required. Normally students say dividend declared, they will minus it from PL. No. Dividend declared and paid. It is already recorded now. If they will say not recorded, this become error in the books of parent company. Then while consolidation in retained earning we should deduct it. But if they say only dividend declared by parent company, no information required. Attention. If dividend is declared by subsidiary company out of pre-acquisition profit, it does not mean it is paid before the date of acquisition. So normally they say dividend declared out of pre-acquisition profit. It does not mean it is paid before acquisition. It may be paid before, it may be paid after. But normally in this chapter this will be paid after only. This point have you understood? Dividend declared and paid by parent company, if recorded correctly, is not relevant for this chapter. But they will confuse you by giving this point. They may confuse you. Understood? If question is silent, always assume that dividend is paid by a subsidiary company after the date of acquisition. Correct. Then concept number 6, you have understood fair value adjustment of assets and liability of subsidiary company on the date of acquisition. Correct. Now, everyone, suppose they have given book value 10 lakh and fair value 12 lakh, and in this book value also they will give 15 lakh. Means this is date of acquisition. Correct. So this is after plus purchase minus sale minus depreciation. This amount is coming in the books of subsidiary company. Now they have given fair value also 18 lakh. Correct. This too we have understood. So increase is what? 2 lakh. This will be adjusted. Will charge additional depreciation for this. What will do about this? Have you understood my question? Is they may give fair value on the date of acquisition and fair value on the date of consolidation also, na? So what will do about this 18 lakh? This is not relevant. Means this may be relevant for Ind AS 16 if you opted for revaluation model. Means it may be relevant for subsequent accounting in consolidation, but if question is silent, so we will not apply revaluation model by our own. Means they have given only to confuse you. They have given only to confuse you. So guys, subsequent fair value adjustment is not relevant for consolidation chapter. Is not relevant for consolidation chapter. Similarly, any fair value information of parent company's assets and liability is also not relevant for consolidation chapter. Understood? Correct. It means fair value adjustment of assets and liability of which company on which date is only relevant. This point have you understood? Subsequent changes in the fair value of net asset of subsidiary company is not relevant for consolidation purpose. Correct? This much you understood? Can I say fair value adjustment will be applied after time adjustment always? Don't apply before time adjustment. So always applied after time adjustment. These are the attention points. Student do mistake यहाँ पर. Correct? Now coming to that point. Suppose in the last question it was given inventory. What was changes? And is given it is sold. You can say if it will be sold. So whenever inventory is sold, so that inventory is charged to PL account, means my expense will increase. If my expense will increase, my profit will decrease. So guys, if this was the changes in the value of inventory on the date of acquisition in parent company books, and now it is sold, so can I say consolidated profit during post acquisition period will decrease by 30,000. One thing, it is sold, so it will become nil na on the date of, this is date of acquisition, this is date of consolidation, so this will become nil. Means can I say it will increase what? It will increase expense of post period, means decrease profit of post period. Bolo yes or no? Correct. Means what they want to say, means what we have done. We have done date of acquisition, date of consolidation, and what post. If you are seeing inventory increase by 30,000, it is sold during which period? Post period. So if inventory is sold, so of course can I say with this amount your cost will increase, cost of sales will increase or not? Means your profit during post acquisition period will decrease, and therefore can I say this will be 30,000 what? Minus, and this will be 0. Have you understood? Suppose they said out of these only 60% sold. So what you will do? 30,000, 60% is what? 18,000 will be post effect, and the balance will remain where? In the balance sheet. Understood this point? Have you understood this point? Till now this point has not been asked in exam. They always say unsold, but if they say sold, most of the student will do wrong. Are you able to understand? Because we only do the question whatever they asked in exam or in a study material. This type of information is not yet asked, but can be asked now. If they are saying unsold, they may also say sold. Are bolna re. If they sold, so that will affect what? Your post acquisition profit. Have you understood this point? Similarly, in the last question they have said trade payable. Trade payable is what? 30,000, and suppose it is paid, so this will become 0. So I will say apply common sense. If you know mathematics, this is plus, this is equal to. Bolo yes or no? So what you will do here? I will say apply mathematics. Date of acquisition plus post is equal to date of consolidation. If it is paid, the closing balance becomes 0. This is 0 or not? So what will do in post? 30,000 means you will do plus ki minus, means negative sign, positive sign, positive sign. Very good. So this will be 30,000 plus. Common sense, na common sense. This is common sense. Suppose they said 50% paid, then what will do? They will say out of this 50% paid, then what? 15,000, and this will remain what? 15,000 negative na? Bolo. Are you able to understand? Suppose trade receivable. In the previous question trade receivable was not given. Suppose trade receivable increased by 10,000. If not collected, then it will be 10,000. Correct. If collected, then minus 10,000. This will be 0. If 20% collected, then minus 2000, 8000. Can I say common sense? This is common sense. If you apply a common sense in exam, you can do it. This type of question till now not asked, but can be asked. They are not giving me an opportunity to prepare question paper. What can I do? If they will give me an opportunity, I will to ask this type of question. Understood this point? Have you understood? Hello. So your doubt over? Now I have explained that also. Then coming to cancellation of intercompany debt. This is very easy. Cancellation of intercompany debt means trade payable in one books, trade receivable in one books. Due to intra-group transaction, parent company has sold to subsidiary company, or subsidiary company has purchased, or parent company has purchased from subsidiary company, that will be cancelled. What journal entry? Trade payable account debit to trade receivable. Correct. Normally, can I say this book value and this book value will remain same? But sometime it may be what? Different also. It is quite possible they have given this is 8,000, this is 10,000. So difference is due to check issued but not received by other party. It's quite possible. Means I have issued a check, so I have reduced my book value, but you have not received the check, so you have not done the journal entry. So quite possible the difference may come. Any difference in this will be what? Check in transit. So you write down payable account debit, check in transit account debit to receivable, and that check in transit will be added to cash and cash equivalent. Correct. So any difference will be recorded where? In check in transit. Correct. Then if suppose there is a cancellation of mutual acceptance, bills payable, bills receivable, bills drawn by one party to other party, bills drawn by parent to subsidiary or by subsidiary to parent, that bill will be cancelled. That bill will be cancelled. Correct. Suppose, just try to understand. Suppose bill drawn by parent company is 10,000. So BR will come and here BP will come. So can I say what journal entry will do in consolidation? Bills payable account debit to bills receivable, cancel. But it is quite possible out of this 10,000, 2,000 is discounted. So this become 8,000. But no journal entry in subsidiary books. So in the balance sheet now 8,000 is coming. This is 10,000. How much you will cancel? You will cancel only to the extent of bill which has been not discounted. Means you will cancel only 8,000. Means how much will cancel? 8,000. This will be totally cancelled. From this how much cancelled? Means in balance sheet bills payable will come how much? 2,000. Understood? So whenever there is a mutual acceptance, you need to cancel bill only to the extent of bill which is not yet discounted. Bill which is discounted will become actual liability in the balance sheet. So this discounted bill, it is payable to bank. Payable to bank now, that should come in balance sheet. So therefore it will come in balance sheet. Understood? Correct. This also you have understood. Concept number 8 is very important. Cancellation of unrealized profit on unsold stock or asset due to intra-group transactions. Correct. I hope this also you know. Suppose parent company, subsidiary company, parent company has sold some goods to subsidiary company. This type of transactions are known as downstream transaction. Downstream transaction. Correct. Now let us assume the cost price of goods sold is 10,000. They have added a profit of what? 2,000. So what is the sale price? 12,000. This become stock of subsidiary company, 12,000. Okay. Now, if it is sold, then can I say profit is already realized? Then no adjustment. But if it is unsold, so can this stock include profit of parent company? Understood? So we need to cancel this transaction. How to cancel this transaction, that we need to understand. So can I say, we'll eliminate sales. Sales account debit how much? 2 Can I say cost of sales will be also eliminated? How much? Cost of sales 10,000 and can difference is 2,000. That will be eliminated from what? Stock. Bolo yes or no? This is the journal entry. Means this sales will be eliminated in SOPL, consolidated SOPL. This cost of sales will be eliminated in what? Consolidated SOPL. Are bolna re. And this stock will be eliminated, means this stock will reduce in consolidated balance sheet. But normally in exam they don't ask statement of PL. They ask only what? Balance sheet. Look at the effect of these two will go to retained earning. Yes or no? Means from examination point of view, we need to give one net effect, because they are not asking what? PL. If they ask PL, then so this is only correct journal entry. We need to reduce sales by, we need to reduce cost of sales by, and we need to reduce stock by. Are you able to understand? And automatically from SOPL, retained earning will be what? Corrected. But now because they are not asking SOPL, so we need to do one smart work. So in this profit, but this stock include profit of which company? Profit of parent company belong only to parent company. Therefore, only retained earning will be affected. NCI will not be affected. Therefore, we will pass one journal entry. Retained earning account debit to what? Stock. By what? 2,000. Have you understood this? If they ask only what? If they ask only what? CBS. They ask you only CBS. Have you understood? Simple. Can I say unrealized profit you can calculate, but unrealized profit you need to calculate only an unsold stock. Suppose out of these 40% has been sold, so 60% remain unsold. So your unrealized profit will be 2,000 ka 60%. Na? Then you need to eliminate only 60%. This you understood? Now this was downstream. Let us come to upstream. Upstream is what? Subsidiary company has sold to what? Parent company. So same, suppose cost price is 10,000, profit is 2,000, this become 12,000, this become the stock, cost price is equal to 12,000. Now this 12,000 include profit of which company? Profit of which company? Subsidiary company. Profit of subsidiary company belong to what? Parent company and NCI. Therefore, to eliminate, the net effect is what? Retained earning account debit, NCI account debit to what? Stock. Understood? Have you understood? I think understood. Means this effect you will do give directly in working note of other equity. Working note of other equity means minus unrealized profit from parent and NCI. If it is downstream, only from parent. Understood? Upstream, downstream. Understood? Yes, sir. Concept number 8 also you understood. Come to concept number 9. Proposed dividend, if given, ignore. Proposed dividend will also not be recognized in CBS. If they have said कि subsidiary company has proposed dividend, parent company has proposed dividend, ignore it. Bakwas point. Ignore it completely. Chalega? Right. Then dividend received from parent company. So from examination point of view, only one point: dividend received by parent company from subsidiary company will be credited to PL of parent company in their separate financial statement as per Ind AS 27. Only this much. I have a detailed discussion required, but that I will not do. Correct? So only this point you should read. Which point? As per Ind AS 27, an equity share recognize dividend from his subsidiary company or joint venture or associate in his separate financial statement when his right to receive dividend is established. Means when right is established. When the right is established, when the dividend is declared. When the dividend is declared, not when dividend is proposed. As per Companies Act, the entity's right to receive dividend is established when dividend is declared by the company. Correct? as per, this you ignore. Understood? This all point you ignore. Correct now. This point number 4, point number 5, this all point you ignore, huh? Don't read only. All you ignore. Why? Because this is for detailed discussion, not at all relevant from examination point of view. I know it is not relevant because ICAI will not go beyond this. There is no question also in ICAI study material. Chalega? This much you understood? Right. Then concept number 8, once again explain. What was concept number 8? Concept number 8 you have not understood. What you have not understood, Ray? Once again, because what? Hello. Once again I will explain. I said whenever we are doing cancellation, so there can be two type of transaction. One is known as what? Downstream. One is known as what? Upstream. Downstream is what? Parent company has sold to subsidiary company. Upstream is what? Subsidiary company has sold to parent company. So in this downstream means what? Closing stock of subsidiary company include profit of what? Include profit of which company? Parent company. It means the profit of parent company is unrealized. So you are eliminating profit of parent company, which is included in closing stock of subsidiary company. Now you only say profit of parent company belong to parent company, belong to parent company and NCI. Only parent company, therefore only retained earning will be affected. If you are eliminating profit, your retained earning will decrease. So your journal entry will be retained earning account debit to what? Stock. This stock will come in the CBS. From the stock also reduce that unrealized profit. Unrealized profit. Understood now? Have you understood? Yes, sir. Now, when I am coming to upstream, upstream is what? Closing stock of parent company includes what? Includes profit of which company? Subsidiary company. Now you only say profit of subsidiary company belong to whom? Parent company and NCI. Parent company means reduce retained earning. NCI means reduce NCI. So what journal entry? Retained earning account debit. NCI account debit to what? Stock. Means retained earning will decrease by this amount. NCI will decrease by this amount. This amount means what? Parent company shares and NCI share. Understood? Have you understood this point? Good now. Understood? Correct. Now, which concept we were into? Dividend received, you understood? Concept number 11, impairment of investment in subsidiary, in joint venture, in associate, in separate financial statement as per Ind AS 36. When I was doing Ind AS 36, I said that impairment of investment in associate, in joint venture, in subsidiary will be covered under Ind AS 36, and they have given two indicators. Then that time I said this indicator I will explain when I will do consolidation. So that time I have not done, so I will do. But this is not relevant for consolidation. This is not relevant for consolidation. This is relevant for what? Separate financial statement. Correct now. So can I say in separate financial statement that investment is a single asset? Individual asset now. So individual asset need to be impaired if recoverable amount is less than carrying amount. Recoverable amount means what? higher of value in use or pay by less cost of disposal, so that can be given. But when we'll do impairment testing, that is given under Ind AS 36. What Ind AS says that it will be tested for impairment if any one of the indicator exists. But this is impairment of what? Investment in separate financial statement, not relevant for consolidation chapter. In regular batch I teach this point here, but this is not relevant for consolidation chapter because it is already impaired in separate financial statement. Thank you very much. And this type of question they will not ask, correct? But let us do the indicator. The first indicator is what? Dividend declared by subsidiary company exceed total comprehensive income of subsidiary company or associate or joint venture. Just try to understand, if you are paying more than whatever you have earned, it means you have earned less profit. Means if you are paying dividend more than whatever you have earned, means in the given year you have not earned sufficient profit. Indication of impairment. If you have not earned sufficient profit, means it might be a case of loss. So whenever there is a loss, there is an indication of impairment or not. So this is the indication of impairment. Perform what? Impairment testing. Correct. Second, carrying amount of investment in separate financial statement are more than net asset including goodwill of subsidiaries, associate and joint venture. What they are saying? The net asset including goodwill in CFS, can I say it will become less than carrying amount of investment in separate financial statement only when there is a post acquisition loss? Have you understood what I am saying? Not able to understand. You suppose this is what separate financial statement. We are writing investment 10 lakh. Can I say on the date of acquisition, asset, liability and goodwill will be also equal to 10 lakh? Bolo yes or no? Because this is PC minus this is goodwill. Now, what they are saying, if carrying amount is less than this, if the carrying amount of investment in separate financial statement is more than what? Net asset including goodwill in CFS. So when it will become more? During post acquisition period, if there is a post loss, means during post acquisition period, if there is a loss, this will decrease now. Are bolna re. During post acquisition period, if subsidiary company is incurring loss, so this will not be affected, but this will be affected or not? So can I say in that case it is an indicator of impairment or not? Indicator of impairment. Perform impairment testing in this. Correct. Theoretical point, not important from examination point of view, but this is relevant for what? And therefore in separate financial statement, what journal entry will do? Impairment loss account debit to accumulated impairment loss. This is not important from consolidation point of view. Correct. NCI already we have done. NCI means what? Calculated by fair value method, a proportionate share in INA method. This method is given in which Ind AS? This method is given in which Ind AS? Ind AS 103. Correct. Correct. Now, can you say NCI will be subsequently measured by applying what? Ind AS 110. Subsequent accounting in consolidation will be done as per which Ind AS? Ind AS 110. So we'll take initial value on the date of acquisition. Can you say plus minus NCI share in PL, plus minus NCI share in OCI? OCI will also come. Huh? Till now they have not given any question based on this in ICAI study material. But can I say any OCI component, post acquisition OCI component should be also transferred to what? NCI? Means only to explain you. Because I don't know whether this type of questions will come or will not come. Till now not given. But दिल कहता पढ़ा दो. दिल मांगे मोर. अरे बोलना रे. दिल मांगे मोर. तो as a student you should also say दिल मांगे मोर. दिल मांगे कम. More or less. As a student, you should think dil mange more. Correct? Yes, sir. Now, can I say, if I say date of acquisition and date of consolidation, only you will be able to understand. Huh? I just want to give one concept to you. This is post. In a post can be PL or OCI. OCI means what? It can be revaluation surplus during post period. It can be fair value gain or loss if the investment is FBT OCI. It can be any exchange difference on translation of foreign operation as per Ind AS 21. It can be Ind AS 19 remeasurement gain or loss. It can be cash flow has reserve OCI component during post acquisition period. हो सकता है ना? Correct? They can also give or not. Correct? Now, we can easily calculate this by applying SONA. Correct? Means this will be transferred to what? Parent company and NCI. This will be transferred to parent company and NCI. So you can see share in PL of, this is what? Share in PL will be added and share in OCI will be also added, na? My question to you all, everyone listen. This will go to where? Retained earning. This will go to where? This will go to as per nature, na? If this is revaluation surplus, this will go to revaluation surplus. If this is what? FCTR, it will go to FCTR. You know FCTR? Foreign currency translation reserve. If this is what? FBOCI reserve, so it will go to FBOCI reserve. Correct? It may be any other reserve also. Cash flow has reserve. So this will go as per the nature in the reserve and surplus of parent company. Reserve and surplus of parent company. Understood? Have you understood this point? Because I will take one question. In that question, this point will be required. But that is not a consolidation question. That is a loss of control question. In that question, they have asked this. Have you understood this point? No, I hope you have understood this. NCI share in PL, NCI share in OCI, but post acquisition, post acquisition. This become carrying amount of NCI at its reporting date. Now the question arises, if suppose this is a loss, and this loss is more than this, means there is a post acquisition loss, and the loss is more than the carrying amount, whether NCI can become negative. Whether NCI can be negative. Yes or no? Saying no. What you are saying? Are bolna. Yes, it can become negative. AS 21 used to say, means if you have done in CA Inter, as per CA Inter it cannot be negative, but as per CA Final it can become negative. CA Inter AS, CA Final Ind AS. Correct. So as per what? CA Final syllabus Ind AS, negative NCI may become, yes, it may become negative, and negative NCI will come where? As a negative balance, where? In equity only. So negative NCI will be shown under equity as a negative sign. Correct. But can now it become easy? Means even the loss allocate to parent NCI becomes super easy, na? However, AS 21 was complicated, I will say. Understood what I am saying? Hello. This I hope you will understood, because this already I have said. NCI on each reporting date. If NCI is measured at fair value, full goodwill is recognized. NCI is proportionate share of INA and full goodwill as on each reporting date. Already I have explained this point. Then if NCI is measured by using Hasina method, partial goodwill is recognized. In this case, NCI is proportionate share of only what? INA on each reporting date. I hope you have understood. Already I have explained this, huh? Yes, sir. Correct. Concept number 13. This already I have done in Ind AS 36. NCI, the impact of goodwill impairment testing. You remember, if it is full goodwill, then okay. partial goodwill for impairment testing, we used to gross it up. Remember when we have done questions, huh? You remember impairment testing? Ind AS 36. If it is CGU, goodwill will be there. If full goodwill, okay. Partial goodwill, so it is only proportionate share of parent company. So to perform impairment testing, we'll do gross up. We'll make it full goodwill, but only for what? Impairment testing. You remember? Same thing is given. Means in regular class, I do that topic yahan par. In regular class, I do that impairment testing in this chapter. Therefore, I have given in this chapter. But this is as per Ind AS 36. Already done. Understood? Correct. And already I have taken questions also. Huh? Just if you want to read up. All the impact has been given. Correct. Now, everyone, one important point. In this chapter now, they will give impairment, but they will give the impairment loss of goodwill. Means they will not ask you to calculate impairment loss. If they ask, you know how to calculate impairment loss as per Ind AS 36. Means can I say in PFS, this asset, liability and goodwill is what? Either one CGU or group of CGU. So in consolidated balance sheet, the asset, liability and goodwill of subsidiary company can be one CGU or can be more than one CGU. We know how to perform impairment testing. Already we have done. That impairment loss will be first allocated to what? Goodwill. Then balance to other asset in the ratio of carrying amount. That already we know. Suppose in this chapter they ask goodwill also as impairment also. That we can do. But they will not ask. Don't worry. They will give impairment loss of goodwill. They will give impairment loss of goodwill. Means suppose they have given impairment loss of goodwill is 20,000. So can you say already we calculated goodwill? Suppose we calculated goodwill is 1 lakh. So we'll do minus what? Impairment loss 20,000. And this will become 80,000. This will go where? In balance sheet. But this 20,000 will be allocated to what? This will be allocated to parent and NCI if full goodwill, and only to parent company if partial goodwill. Means this loss will be allocated to parent company and NCI if it is full goodwill. This loss will be allocated only to parent company if it is partial goodwill. I hope you have understood. That is only given. If NCI is measured at fair value, full goodwill is recognized, then what is the accounting treatment of impairment loss? Retained earning account debit, NCI account debit to goodwill. And if it is Pasina matter, then which goodwill? Partial goodwill. Then what is the journal entry for impairment loss? Retained earning account debit to goodwill. Understood? Correct. Now up to this, can I take one more question which have been asked in exam? Bolo. Sir, do now. Are you able to understand or not? Please everyone respond, live class. Whatever we have done till now in consolidation, whether it has increased the concept. Have you understood? Live class student also please respond. Are you able to follow me or not? Because this entire chapter we do in 15 class. In regular class. That I will complete in 5 hours. Not easy, huh? Not easy. And if you are able to understand, then maja aa gaya. Are you able to understand? Chalo, everyone is saying yes, sir. Can we take one more question? Or you want 5-minute break? Just take 5-minute break. बहुत ज़्यादा हो गया. Flow में. ठीक है? We'll take 5-minute break. चलो. Now, can we start again? Now, before break we completed up to which concept? up to concept number 13. Can we take one more questions so that you will feel what? Sort comfortable? Correct now. This question was also asked in exam. However, the similar question I have taken from old syllabus and similar question I have taken from international book, and same to same question was asked in exam. Means sometime my other source question is also important now. This was not a question of ICAI study material. Similar question I have taken from international book and same question was asked in exam for this question. What is the question? Let us read. On 1st April 2017, A Limited acquired 80% of what? Share capital of S Limited. On acquisition date, the share capital and reserve of S Limited stood at rupees itna and itna respectively. Of course, they have given opening balance. They have given on acquisition date. Because can I say the acquisition date is 1st April only? So it means opening balance and acquisition date are same. It means there is no time adjustment necessary. There is no time adjustment applicable. A Limited paid initial cash consideration. You can see it means they have not given PC in balance sheet. You need to calculate PC. This is only what good point in this chapter in this question. Additionally, A Limited issued 2 lakh equity shares with a nominal value of 1 per share at a current market value of 1.8 per share. It was also agreed that A Limited would pay a further sum of 5 lakh after what? 3 years. A Limited cost of capital is 10%. They have given discount rate. The appropriate discount factor also they have given 0.91, 0.83 and 0.75. This is deferred consideration. Deferred consideration will be measured at present value. The shares and deferred consideration have not been recorded. Means they have recorded only what? Cash consideration. So you can see in balance sheet, investment will come only with the amount of cash consideration. What is not yet recorded? Equity share capital and deferred consideration. Below are the balance sheet as on which date 31st March 2009. Now you only say what is the date of acquisition? Date of acquisition is what? 1st April. And what is the date of consolidation? 31st March 2019. Means can I say it is 2 year? Correct. Means can I say you should recognize, you should calculate PC on this date. PC is what? Cash how much? 10 lakh. Equity shares how much? 2 lakh multiplied by what? 1.8. How much? 2 lakh 60,000. 3 lakh 60,000. And deferred consideration 5 lakh multiplied by what? 5 lakh multiplied by what? Bolo. Multiplied by what? No. 5 lakh multiplied by what? Just same he multiplied by what? I'm asking what? You are saying present value factor. Who will give present value factor? I or you? What? Give me factor, discounting factor. 2.49. Everyone saying 2.49? Everyone saying 2.49? Dekho, what mistake you are doing? Just try to understand. 5 lakh is payable after 3 years, means at the end of 3rd year. Will you take annuity factor or present value factor? Means you are doing sum total of this. Just try to understand. We apply what information is given. We don't apply our common sense. I was knowing you will do mistake and you have done mistake. अरे बताओ, we'll do 5 lakh into 0.75 or we'll do 5 lakh multiplied by this 3. Well, if 5 lakh is payable at the end, at the end, at the end. Are you able to understand what I want to say? If I would have said 0.75, you know this point. Same thing in exam, you do mistake by taking wrong information from the question. If in class you are taking wrong information, exam to high chance. And therefore what is required? Concentration. Don't depend on me. I will ask question to you. I am just informing you. We are not able to apply the information given the question. They are confusing you by giving this. Am I right or not? So 0.75 na? How much? 3,75,000. Only this point I need to explain. The other point is very easy. So can you say what is this total? 17 lakh 35,000. 17 lakh 35,000. Now, just try to understand. Because we are preparing consolidation as on this date. So can you say this will not change यहाँ पर? This will not change यहाँ पर because this is equity. But this will change or not? This will change. Why? Because this is liability and liability will be calculated at amortized cost. So we need to first find out what is the interest expense of this year. 3,75,000 into what? 10%? Na? 10%. How much? Can is 37,500. That will be plus equal to then what? 10%. How much? 41,250. And the balance will be equal to what? 4,53,750. Have you understood? Have you understood? Bolo. Correct. Means this is not yet recorded error. We should record it. This is not yet recorded. We need to record it. This is not yet recorded. We need to record it. This is not yet recorded. We need to record it. Means in this question, what was given? Error given. We need to record or not? Record. But what journal entry will do in parent company and subsidiary company? Batao. For this. So can you see in parent company investment will increase by what? Give me figures in thousands. Investment will increase by what? In separate financial statement. Can you say by this amount and this amount? Correct now. It will become 3,60,000 plus 3,75,000 means 735. Correct. Bolo yes or no? 2. Deferred liability how much? 375. 2. Equity share capital how much? Equity share capital will come at nominal value. Second mistake. Second mistake, I am here to identify your mistake. Equity share capital will come at nominal value. Kasam khao. Kasam khao. Equity share capital will always come at nominal. Kasam. Understood? These are the area where every student do mistake. Correct? Batao. How many equity shares? So 2 lakh into 1 only na. 2 lakh into 1 means 200. And the securities premium will be how much? How much? 1,60,000. Correct. Can I say we need to pass one more journal entry? Can I say retained earning will decrease by interest expense during 2 years and your deferred liability will increase? Deferred liability will increase. In exam, don't write DL, huh? Don't write DL. Deferred liability. Correct. So what is the total interest expense? 37,500 plus 41,250. How much? 78 point. So 78.75. 78.75. Have you understood this? If you have understood this, means we can proceed. But what journal entry in the books of subsidiary company? What journal entry in the books of subsidiary company? Well, journal entry, give me. What journal entry in the books of subsidiary company? Everyone will respond. Bolo. What journal entry in the books of subsidiary company? One is responding only. Parent company, you understood? What journal entry in the books of subsidiary company? No journal entry. Ray. Why you are thinking so much? This equity share they are purchased from what? Shareholders, not from subsidiary company. When I started this chapter, I have said this only. If question is silent, always purchase from what? Shareholders. So shareholders will pass journal entry for sale. Subsidiary company equity shares will not change, huh? So there is no journal entry in the books of. So whether this transaction will affect Sona? Whether this transaction will affect Sona? Sona of which company? So whether it will affect Sona? No journal entry, so no effect. Just try to follow me whatever I am saying. Sona of which company? ICAI of which company? So whether it will affect Sona? No, it will not affect Sona. Understood? Correct? This much, any doubt? Now, can I read the balance part of the question? I have not read. I have just given the information about this first part. Yes, first part was only jhatka. First part was jhatka or not. If you have done mistake in first part, then no one can save you. Correct? Yes, sir. Then shares, this we have written. Then property, plant and equipment, investment. What suggestion I will do? My suggestion, whenever there is some error and you have rectified it, I will say incorporate that error in the balance sheet. It will help you when you are preparing consolidation. Otherwise, when you will prepare consolidated balance sheet, you will miss that point. So my suggestion is that just give the effect in the balance sheet also. So but your investment will increase by what amount? 735. Correct? Then your equity share capital will increase by what amount? 200. Your securities premium will increase by what amount? The securities premium will come how much? 160. And retained earning will decrease by what amount? Retained earning will decrease by 78.75. Deferred liability will come. So deferred liability is now payable after 1 year. It will be current liability. So deferred liability will be how much? Batao. Already I have written 453.75. Understood? This is my suggestion, but I know you will not follow my suggestion. I is 90% seen that whatever teacher will give suggestion, you will never follow. You will use your own method. And normally because of this reason we do mistake in exam. When you will prepare consolidated balance, you will miss deferred liability. Because you don't know now. You have forgotten. So this is my suggestion. Whenever there is error, incorporate that error, means rectification in your balance sheet only, so that you can avoid that mistake. Chalega? Because the objective of this batch is to give you concept and give you the area where you do mistake. Then further information. Now it is very simple. On the date of acquisition, the fair value of S Limited plant exceeded is book value by 2 lakh. Means they have given changes only. The plant had a remaining useful life of 5 years. The consolidated goodwill has been impaired by what? 2,58,000. The A Limited Group value NCI interest using fair value method. Thank you very much. At the date of acquisition, the fair value of 20% NCI is 3,80,000. Thank you very much. You are required to prepare CBS. You can see only 3 adjustment. Only Jhatka was what? First point. Now it becomes super easy. Can we do? Batao. What is the first working note? I will say always do what? Fair value adjustment. Fair value adjustment of what? Plant, na? Yes, they have given increase only. But the increase on the date of acquisition, how much? 2 lakh. Can I add on 200 rupees in 1000? Minus what? Additional depreciation. So post period is what? What is the post period? Post period is what? 2 years. It means you need charge depreciation for 2 years. It will be 200 divided by 5 into what? 2 is equal to what? 80. Are you able to follow me? So what is the net increase? 120. All figures are in 1000. Rupees in 1000. Working note number 1 done. Come to working note number 2. Lollipop question. Huh? Date of acquisition, date of consolidation, post. Batao. They have given general reserve and they have given retained earning and general reserve, na? General reserve. Batao. Can you give me equity share capital on the date of acquisition? 500. Of which company? Oh. It is given 500 only, na? What you are observing? Huh? You said 500, then what was the doubt? What was the doubt? Now, pehle batao. What you are thinking? What you are confused that I am asking? We'll take 500, na? We'll take 500, na? Don't be confused there. This I said already very simple. Retained earning opening balance how much given? 1. Closing balance. What is the doubt? I am not able to understand that. Why you are confused? 175. General reserve opening balance. Achha, they have not given. Oh. Achha, they have given 5 lakh and 125. You are confused with this. The share capital is 5 lakh. This only you will take. 5 lakh remains same, na? That is only. Chalo, theek hai. General reserve is 0. So don't prepare general reserve column. I was thinking general reserve they have given. Chalo, theek hai. Okay. Now, okay. This is what? 625. This is 175. This is 800. Now think. Whether any abnormal item? Think. Whether any abnormal item? Abnormal item. Any dividend? Any error? In subsidiary books? Yes, you are saying, but in subsidiary book. Why right now I have done Jana entry, no Jana entry where? Then why you are thinking now? No error where? Error was in which book? But I am asking Sona of which book? So I am asking error, why you are confused? Any error? No. Understood? 1 second. Think. Because in exam you will be confused by this point only. Okay. You need to apply 3 adjustment. First, any dividend paid, any abnormal item, any error in subsidiary books. No, khatam. Any time adjustment? No, means nothing is there. Any fair value adjustment? Yes, working note number we have done. So only do plus minus what? Fair value adjustment. So easy question. But the fair value adjustment on the date of acquisition, how much? How much additional depreciation? Then what is the net effect? Low. This become what? 625 plus 200, 825. Then 175 minus what? 80 is equal to 95. And this is how much? 800 plus 120, 920. Super easy. I will say better question was previous question. But when this question was asked now, everyone says out of syllabus. Even though I have done same to same question in my class. But other sources, no one will do only. Before exam, we don't do other source questions. Who will do? You will do? No. But same to same question I have taken in my ICAI module. But in my module. But just try to understand, even though not done, can I say this point was not complicated? Whether this point was complicated, you only say. Whether this point was complicated. Huh? This point was not complicated. But because of this point, every student was confused. Chalo. Now working note number 3. Goodwill or gain on bargain purchase. Batao. What is the fair value of consideration paid? Already we calculated. Huh? How much? 1735. You need to do one working note for this also. Huh? One working note for PC. That I have done in that timeline only, but working note of PC is also required. Then fair value of NCI given. How much fair value of NCI given? $380,000 total. 2115 minus fair value of INA how much? $825. What is goodwill? Only 825 is coming. How much? 1290. Whether my answer is correct, check करना. ठीक है, okay. Now 1290. But this is full goodwill, pass of goodwill. But now minus what? Impairment loss is given in the question. How much impairment loss? 2,58,000. So what is the carrying amount of goodwill in the balance sheet? 1032. This impairment loss will be attributable to parent company, ki both parent company and NCI. Why? Because it is full goodwill. So this will be also adjusted in other equity. Last working note. Working note number 4. So we have retained earning and NCI. Can you give me the first balance? Retained earning balance from parent company books. That will do adjustment. Give me the first opening balance. 1400 and NCI will take how much? 3,80,000. Minus first rectification. So interest expense not recorded. How much? 78.75. Then what? Then share in PL. Share in PL. This PL na 95. Allocate in which ratio? Allocate 76 and 19. Then minus impairment loss also. This will be plus, sorry. Minus impairment loss will be also allocated. $190 and 47.6. So can you say only this was one new point? Have you understood this? $258, 80% na? What percentage you have taken? Please concentrate. I am saying concentrate. I will say take your time but give me correct answer. Don't be in hurry. Now okay? Batao, what is the closing balance? How much? Correct. Simple na? Okay. One doubt came, sir, what is 78.75? So once again I will say 78.75 was interest expense because we calculated deferred liability at present value. So of course present deferred liability is a financial liability. Financial liability will be recognized at amortized cost. So of course we need to add interest expense now. So because they have not done any journal entry for deferred liability, it means they have not recognized interest expense also. So we need to calculate interest expense of first year and second year. At what rate? 10%. So first year it will be what? 3,75,000 into 10%. Then we'll add it. Then 10% this will come and this will become closing balance of what? Deferred liability. Now understood? Understood. Before my explanation, you said understood. Hello. Now can I prepare balance sheet? Balance sheet, you will prepare one balance sheet. You prepare balance sheet. I'm giving you 5 minutes, prepare balance sheet. Everyone prepare balance sheet. Fast. Done? Balance sheet tallied. Balance sheet tallied. If not tallied, I will identify the mistake. Tallied balance sheet? Don't see the solution. Tallied or not tallied? Not tallied. Not tallied, na? I was knowing it will not tally. Let's see what mistake you have done. Chalo. Let's see what mistake you are doing. Don't discuss. Your balance sheet tallied or not tallied? Tallied or not tallied? Not tallied. Live class, whether your balance sheet tallied? I know where you have done mistake. Chalo, let us identify where you have done mistake. It is 500 plus 1500 plus 120. This is correct. Investment will not come. Inventory 550 plus 100. Receivable 400 plus 200. Cash 200 plus 50. Then correct. Only this much will come. Then coming to what? Liability. Equity and liability. Equity and liability will be 2000 plus 200. That you have done. You have done 2200. Then other equity, retained earning will be as per working note. As per working note you have done. Is what amount you have taken? 1190.85. Correct. Then securities premium you have taken 160. Very good. Correct. Then NCI you have taken how much? 347.40. Then non-current liability will be 3000 plus 400. Then current liability will be 1250 plus 650 plus what? 453.75. This also you have taken. This also you have taken. Then so it will tally. If it is not tally, then so this amount is wrong. Not telling. $453.75 you have taken, na? Very good. Excellent. I have written here, then also you are doing mistake. It means you have not written. Not tallied. Calculation mistake. Chalo, hota hai. Understood now. What was your mistake? What was your mistake? Gain and loss. Achha, goodwill will also come. Goodwill you have written, na? That will also come. Chalo. Done. So one question also, this also done. Let us come to some other concept. Now, next concept is what about step acquisition. What is the meaning of step acquisition? Step acquisition means, suppose this is what? Subsidiary company information, and parent company acquired first 10%, then suppose 20%, and then suppose 30%. So you can see the cumulative holding will be first 10%, here 30%, here 60%. So control is obtained यहाँ पर. Control is obtained यहाँ पर. Means 103 will be applicable on this date. Correct. Means before they have already accounted for this investment. But can you see, you will calculate goodwill or gain on bargain purchase on this date? and you have paid consideration for this PC, you have paid for 30%. So this become, can I say, this become your previously held equity interest. So in case of step acquisition, this one step acquisition means multiple acquisition to get control. So whenever there is a multiple acquisition to get control, goodwill will be calculated only when the control is obtained. Means at this point of time goodwill will be calculated. And to calculate goodwill, what Ind AS 103 says that this will be the previously held equity interest will be measured at fair value. Understood? Means what will be formula? The formula to calculate will be now fair value of consideration paid plus fair value of NCI plus fair value of previously held equity interest. Means in my example, suppose this is 30%, we have acquired on the date when we are obtaining control, already we are holding 30% and this was 40%. So we'll take fair value of previously held equity interest for 30%. Correct? This will be total minus fair value by NA. This will be goodwill. Correct? But can I say in CFS already we have done accounting for this, means already it is coming and at investment some carrying amount. So this is carrying amount, but on the date of acquisition it will be measured at fair value. Some difference will be there. This will be gain on measurement, gain on remeasurement on the date of acquisition. So this gain on measurement will be transferred to PL or OCI as the case may be. Means if this was FBTPL, this gain will be transferred to. If this is FBTOCI, then this gain will be transferred to OCI in consolidated balance sheet. Understood? I hope you have understood. Same thing is written. In a business combination achieved in stages, the parent shall remeasure its previously held equity interest in the investee, now subsidiary, at its acquisition date fair value, and recognize the resulting gain or loss, if any, in PL or other comprehensive income as appropriate. However, if question is silent, always PL. If question suppose does not say about the investment classification, whether it is FBTPL or FBTOCI, then always transfer gain to what? PL. Then don't transfer it to OCI. Understood? Correct? I think this is very easy. You can do it by your own. Correct? Only what will happen? Only one new point added, fair value of previously held equity interest. Chalega? Yes, sir. The next concept is what? About acquisition of interest in subsidiaries without consideration. Sometimes you obtain control without paying any consideration. Without paying any consideration. Let me take one example. Suppose what happened? Suppose in X Limited, there is one company A Limited who is holding 40%, and there are many other shareholders who are holding 60%. It means A Limited has no control, no consolidated balance sheet. But what happened? After some year, this X Limited acquired some equity shares from these shareholders, means they have buyback. Correct? Means let us assume, suppose total share capital was 1 lakh. They were holding 40,000, and these small shareholders were holding how much? 60,000. After some year, X Limited bought back some equity shares. Suppose they bought back what? 25,000 equity shares. Correct? So after buyback, can I say this will be remain 80,000 equity, 75,000 equity shares, but now they are holding how much? 40,000, and they are holding how much? 60 minus 25, how much? That is 35,000. So now automatically they will gain control, because 40 by 75 is more than 50%. So automatically they will gain control, not without paying any consideration. So this is known as acquisition without consideration. So in this case, can I say what will be the formula to calculate goodwill? Can I say fair value of only previously held equity interest will come? There is no consideration paid. Fair value of NCI will come. This is total fair value of INA. This will be goodwill or gain on bargain purchase. Understood? Have you understood? Correct. The next concept is concept number 16, changes in the proportion held by NCI. changes in the proportion, it means what? Just try to understand. Suppose initially we acquired 10%, then again we acquired 20%, then again we acquired 30%. Correct? So what is the cumulative holding? It is 10%, it is 30%, it is 60%. Means what is the status of investee company? We suppose this is S Limited. So can you say in the books of investor, initially it was other entity. Then can I say it become associate? Because on this date significant influence was acquired. I'm assuming that you know associate. So once we have acquired more than 20% shares, it is presumed that we exercise significant influence. So here the S Limited become associate. Here it become what? Subsidiaries. So as per Ind AS, in separate financial statement, in consolidated financial statement. So can you say initially we'll apply Ind AS 109? In CFS also we'll apply what? Ind AS 109. If it is investment in what? Other entity. Then once it become associate, in SFS we'll apply 27. We'll come to Ind AS 27. But in CFS we'll apply 28. 28 also will come. But once we gain control, then in SFS we'll apply 27, but in CFS we'll apply 103 and subsequently we'll apply 110. This point have you understood? Have you understood this point? Then what they are saying, suppose once we obtain control, again we purchase 10%. Quite possible? Understood? So can I say, what is NCI? In this case, the NCI was 40% यहाँ पर. Now, the cumulative holding becomes 70% and NCI become 30%. Or it might happen, we have sold 5%. So my cumulative holding will become 65% and NCI will become what? 35%. Are you able to understand what I am saying? So, can I say due to further acquisition of shares or due to disposal of shares, control will not be lost. Control will not be lost or extra control will not be gained. So, due to this, will not adjust the amount of goodwill. Means whatever goodwill was calculated, that will remain same in the balance sheet. Means due to further acquisition of shares or due to disposal of shares, control remains same. There is no loss of control. There is no gain of control. Correct? Only what will happen? Only NCI proportion will change. Means initially it was 40%, it become 30% and then become 35%. So what Ind AS says that only NCI proportionate will change. Means in case of further acquisition of shares, what journal entry will do? In case of disposal of shares, what journal entry will do? That we need to understand. Understood what I am saying? So in case of further acquisition, NCI will decrease. You will pass journal entry NCI account debit to cash or bank. Understood? NCI will decrease with the proportionate share in net asset. Proportionate share in net asset, or we can say equity. Correct? And cash and bank will be consideration paid. The difference will be transferred to what? Can I say this is NCI? Means any changes in equity will remain in equity only, and therefore difference will not be transferred to PL. Difference will be transferred to what? Other equity. Similarly, when there is a disposal of shares, NCI will increase. So what journal entry will do? Cash or bank means consideration received to NCI. NCI will be proportionately increased. Proportionately increase means 5% increase will do. Correct? And the difference will be transferred to other equity. Understood? This is the what? Have you understood? Correct? Means to inform me, if I take one questions. Suppose initially this is the date of acquisition. Suppose initially NCI was 1 lakh. Then this is the date of what? Date of further acquisition. So can I say we'll add share in profit, it become 1,20,000. Suppose initially it was 30%. Now also 30%. But out of 30%, 10% was acquired. 10% was acquired. So what journal entry you will do? That we need to understand. Correct? So because 10% was acquired by whom? Parent company. So NCI will decrease. Suppose 10% was acquired by payment of, let us assume 35,000. How much paid? 35,000 was paid. So what journal entry will do? NCI will decrease to what? Cash or bank? So it is 35,000. But how much NCI? Can I say 1,20,000 represent how much? 30%. So how much represent 10%? That we need to find out. So 1,20,000 divided by 30% into what? 10%. How much? So it means NCI will decrease by what? 40,000, and the difference will be transferred to what? Other equity. Other equity means retained earning. 5,000. Means in consolidation only these three changes. NCI will decrease, cash will increase, and other equity will increase. Have you understood? Similarly, there can be what? In the same question, we can say that 10% has been sold. If suppose if I say parent company has sold 10%, to NCI will increase. Then what journal entry will do? Reverse journal entry. Cash and bank to NCI, and the difference will be other equity. So NCI will proportionately increase by 10%. If 30% is 1,20,000, so how much 10%? 40,000 only. So 40,000 will increase. We can do the journal entry. I am assuming that this point you have understood. Correct. This point also you have understood. Same thing is given. Check करेंगे. Accounting treatment on the date of change in CFS. For further acquisition of shares, NCI account debit to cash and bank. Any difference will be recognized in other equity. For disposal of shares, cash or bank to NCI, any difference will be recognized in other equity. चलेगा? बोलो. Now, concept number 7, loss of control. This is important. बोलो. Loss of control. Can you say whenever there is a loss of control, the loss of control will be due to disposal of shares? Disposal of shares means either there can be partial disposal of shares or full disposal of shares. Means if I say in this way, after this they have sold, suppose they have sold minus 40%, minus 40%, so 65% will become minus 40 is equal to what? 25%. Automatically the control will be lost. Or they have sold entire 65%. So can you say loss of control may be due to what? Partial disposal of shares or full disposal of shares. But can you say whenever I am saying partial disposal of shares, so some investment will be retained. But in case of full disposal of shares, that investment will not be retained. So what will be journal entry that we need to understand? So simple journal entry. Can you say whenever loss of control, all asset, all liability of subsidiary company will be de-recognized. Similarly, goodwill, whatever was recognized earlier, or gain on bargain purchase, whatever was recognized earlier, that will be also de-recognized. So can I say asset will be de-recognized, liability will be de-recognized, goodwill will be de-recognized at carrying amount. Similarly, NCI will be de-recognized. Now no NCI will come. So NCI will be also derecognized at carrying amount. And if any investment is retained, so that investment retained will be recognized at fair value on the date when the control was lost. So any investment retained will be measured at fair value on the date when the control was lost. Have you understood? Journal entry we can do, but what journal entry will do? First, let us assume out of 65% we sold 40%. So what journal entry? Bank account. Can you say we receive consideration for 40%? Then investment retained. So can you say investment retained? How much investment retained? So investment retained will be what? 25%. Can you see this is the fair value of consideration received and this is the fair value of investment retained? Correct. Can you see NCI will be debited? NCI will be what? How much percentage? 35% na? 35 na? 100 minus 65. Okay. So NCI will be derecognized at carrying amount only. Correct. If there was some gain on bargain purchase which was transferred to, so that will be also derecognized at carrying amount. If there is some goodwill, so that will be also derecognized at INA will be also derecognized at carrying amount. The difference will be what? Gain or loss which will be transferred to what? PL. This gain or loss will be transferred to PL. Understood? Simple. Super easy. Understood? Any doubt? Follow. Any doubt? Have you understood? I think journal entry you have understood. Only one point I need to explain in this. The point is what? This you have understood it. If a parent company loses control, derecognize asset including any goodwill and liability at carrying amount. Derecognize carrying amount of NCI at carrying amount. Correct. Understood. Recognize the fair value of consideration received. Recognize any investment retained at fair value. Correct. And last point, recognize any resulting difference as a gain or loss in PL. And this gain or loss in PL will be attributable to parent company because now there is no NCI. Loss of control, there is no loss, no NCI now. So entire gain or loss will belong to what? Parent company. But this point only I need to explain. Reclassify to PL or transfer directly retained earning if required by other Ind AS the amount recognized in OCI in relation to subsidiary company. Means when I was explaining this point, everyone, you remember this point? Which point? Sorry, did I explain? I am not done explaining. I have explained OCI component now. This point. Remember, I said there can be any post-acquisition OCI. So this post-acquisition OCI will be allocated to parent company NCI. But to the extent of parent company share, it will be transferred to the other component equity as per the nature. So it may be suppose 80%. So 80% has been transferred to reserve and surplus. 80% has been transferred to FCTR. So this will come in the balance sheet. So this will be also derecognized. Because this belongs to which company? Subsidiary company. If there is loss of control, this will be also derecognized now. Derecognized means this revaluation surplus will be either reclassified to PL or transfer retained earning. As per respective Ind AS, you only say revaluation surplus will be transfer retained earning or transfer to PL. Means there are two type of OCI component. Either it will be reclassified to PL or it will be transferred to retained earning. So revaluation surplus will be reclassified or will not be reclassified. So it will be transferred to what? Retained earning. FCTR, you know about FCTR? It will be transferred to what? PL, means reclassified. FBTOCI reserve, there are two types. Debt instrument, reclassified to PL. Equity instrument, transfer retained earning. Correct? Cash flow has reserve, if you remember. Cash flow has reserve. Correct now. If there is a cash flow has reserve, if it result in non-financial asset, then adjusted with non-financial asset. If it is resulted with what? Other case, it will be reclassified to PL. If question is silent, you can reclassify to what? PL. Means reclassification based on what? Other Ind AS. Correct? Can I take one question based on this? Okay, very good question which is not yet asked. So I am supposing that means as per my sixth sense, this question can be asked in exam, because very good question. I like this question personally. Only the student who is conceptually strong can do it. Let me take. As at the beginning of current financial year, AB Limited hold 90% equity interest in BC Limited. During the financial year, AB Limited sells 70% means partial disposal of his equity interest in BC Limited to PQI Limited for a total consideration of 56 crore. Consumer loses control of BC Limited. At the date of disposal, the fair value of 20% is 16 crore given, and the net asset is given how much? 60 crore. These net asset include the following. Include the following. Point number A means this net asset include following assets and liability. Means these are the net asset. If I am saying this net asset include following assets and liability, the following assets and liability related to subsidiary company only. Correct. So debt investment classified as what? FBTOCI of 12 crore. Means this 60 crore consists of 12 crore, and related FBOCI reserve is what? But out of this 90% belong to whom? 10% belong to whom? So how much 90%? 5.4 crore. Correct. Then net defined benefit liability means when we'll do Ind AS 90, we'll understand remeasurement gain or loss. So there is some remeasurement gain or loss for defined liability, that is also transferred to what? OCI. Correct. So there is a net defined benefit liability 6 crore that has resulted in a reserve relating to net measurement loss of 3 crore. But the how much 90%? 2 point. 10% how much? 0.3. Equity investment considered not held for the purpose of trading. You only say if it is not held for the purpose of trading, we can measure it as FBTOCI. Option has been given, for which irrevocable option of recognizing the changes in FBOCI has been availed, and related FBOCI reserve is what? 4 crore. But the 90% how much? 3.6. 10% is what? 0.4. Net asset of a foreign operation of 20 crore and related FCTR is 8 crore. So 90% is how much? 7.2. Understood? In consolidated financial statement of AB Limited, 90% of above reserve were included in equivalent equity reserve balance and 10% attributable to NCI as a part of carrying amount of NCI. That's only I have said. Means, can I say when you are derecognizing, you will derecognize this and this will be reclassified to PL or retained earning, you only say. No, this is that investment. That investment FBOCI reserve is always with recycling. We have done under Ind AS 109. There are two type of FBOCI. One is debt instrument, one is equity instrument. Equity instrument will not be recycled to PL. That investment will be recycled to PL. You remember? So this will be transferred to what? PL. Net defined benefit liability till now we have not done India's 19 this crash batch, but this will not be reclassified to PL. Means this will be directly transfer retained earning. But this is loss, loss. Correct. FCTR means, sorry, this is FBOCI reserve equity investment. This will be also transferred to retained earning. And FCTR will be reclassified to PL as per India's 21. So first we need to understand whether it will be reclassified to PL or whether it will be transfer retained earning. So I will say before exam you should make a note of all OCI component. Write down where it will be transferred. Just revise before exam and go. I will, if you ask at the end, I will just give you all the information which will be reclassified, which will not be reclassified. Are you able to understand? I by India's one already I have given, but that time you are not knowing all OCI component. Correct? Now we can do the journal entry. Can you give me the journal entry? I will give you the journal entry, you will give me the amount. Chalega? Batao. I'll give you the journal entry, you will give me the amount. Chalega? अरे बोलना रही है. Bank account how much? 70% sold. How much? 56 crore. Investment retained. How much investment retained? 20% retained. How much? NCI the carrying amount is given. Check karo. Carrying amount is not given, so we can calculate carrying amount. So can you say this is what 10%? So what is the INA? Net asset given how much? 60 crore. Cut 10% how much? 6. It will be always 6. This is concept. Understood this point? Have you understood this point? Now, whether goodwill is given in the question, we will assume, if goodwill is not given, we will assume net asset is inclusive of what? Goodwill. We have no other option. Normally when they say INA, INA is excluding goodwill. When they say net asset is including goodwill. Correct? So we will take assumption that only. What is the net asset given? 60 crore. Goodwill let us assume not given or included in net asset only. Okay. So can you see there will be gain or loss? How much gain is coming? Eight 18. So this will be first journal entry. I think this journal entry is super easy. Then we'll do journal entry for de-recognizing OCI component. So one by one. One we have FBOCI reserve debt instrument. Batao, how much 90% is given? $5.4. It will be classified to what? PL. 5.4. This will be also transferred to PL. Then second, we have one FBOCI reserve equity instrument. How much? 3.6. It will be transferred to what? Retained earning. Then we have one FCTR account debit. This will be transferred to what? PL. How much? 7.2. Then there is one remeasurement loss. So remeasurement loss means having debit balance. So what will do? Retained earning account debit to remeasurement reserve. You can say remeasurement reserve. How much? 2.7. Have you understood this journal entry? However, you can do one compound journal entry also. You can do one compound, but ICAI solution also has given separate journal entry. I have also given separate journal entry. But you can compound also. But if you compound, what is the total effect in PL? 7.2 plus 5.4 plus what? Plus 18. So this become gain or loss on disposal of subsidiary. Understood? And how much impact in retained earning? 3.6 minus 2.7. Understood this point? Sorry. What is that? Is loss? What loss? That I have given a remeasurement loss having debit balance. So we have done this journal entry and it has been debited to retained earning. Point number 4, check karo. Understood? There is a loss. The loss have debit balance. So reserve has debit balance. So when you are closing, you will credit it now. This is closing entry. Understood? If you have a gain, so gain will have credit balance. So at the time of closing, we are debiting that reserve. Understood? You can see the same journal entry has been given. So you can see this A, B, C, D, whatever they have given. First they have given why we are doing so. In exam, don't write down this much. Just write down what one sentence. This will be reclassified to PL. This will be transferred retained earning. Don't write down this much. Correct now. You don't have time to write down this much. You can see the same journal entry is given. Check kar lo. Understood na? But don't write down that much because that much time you don't have. They have given entire thing. When you are writing same question will come, so just write down as per Ind AS 19 it will be not reclassified to PL. As per Ind AS 109 it will be reclassified to PL. Just write down in this way. Chalega? Bolo. This also you have understood. Can we proceed? So I have taken one good question. Balance question can you do by your own? Last point of Ind AS 110 will take. That is chain holding. Chain holding. Now let us come to chain holding. Chain holding, what I will do, I will not read any concept. I will take what? Directly, I will explain you directly with the solution. You all know chain holding? Chain holding means what? Is suppose P Limited have control over S Limited and S Limited has control over some other company. So it means P will also control what? Means if P control S and S control SS, so P will also control what? SS. It means P will consolidate this as well as this. So how to prepare consolidated balance sheet of P? They will not ask S because S to whatever we have done till now that only will be applicable. Because S is also a parent company for SS. So of course S may be also required to prepare CFS. P will also prepare CFS. But S will prepare only with what? SS. P will prepare with S and SS. Yeah. Now. Correct. Now just try to understand this chain holding. From my point of view, there is one mistake in the solution, suggested solution, correct? But I will go as per ICAI solution only. Why I will go for as per ICAI solution? Because they have not, they have already corrected it, but they have not corrected one point. So I don't want to put you into any risk. I'll follow ICAI solution, but from my point of view, there is some conceptual mistake. So I will ignore that. I will totally inform you right now what ICAI has done. Correct? Understood what I am saying? Yes, sir. So I will not do detailed discussion on that. I'll just concentrate from examination point of view. Chalega? Given below are the balance sheet of group companies comprising LX Limited, MX Limited and NX Limited. This is also exam question. Property, plant and equipment. Actually this is investment. Investment will come here. Will come in the next what? Line. 1500 this given. Investment given, two investments. 17 lakh shares in MX Limited. So LX Limited has purchased shares of MX Limited and 99.6 lakh shares in NX Limited. Means MX has purchased shares of NX Limited. Current asset they have given. Okay. You can see they have given what? Shareholders, reserve and surplus, trade payable, everything is given. You can see there is one MX Limited also यहाँ पर 55. So of course there will be some what? Can I say in trade receivable it might be included somewhere? Means in the books of NX Limited, what is coming? MX is coming. So in the books of MX, there should be NX now. So in this, that amount will be included. So we need to cancel it. Chalega, whatever I am saying. Have you understood what I am saying? Acha, this is bills payable. Acha, this is bill payable MX Limited. So it will be in bills receivable. So we need to cancel bills receivable to the extent of 55. Chalega. LX Limited hold 85% shares in MX Limited, which will acquired on 1st April 2020. And MX Limited holds 60% shares, which were acquired on 30th September 2020. Means the date of acquisition for LX to MX is 1st April. Date of acquisition for MX to NX is 30th September. Means one thing is clear that 30th September there is some time adjustment. The falling balance stood. You can see they have given falling balance of reserve and surplus and retained earning. That was required opening balance they have given. Opening balance. The business of NX Limited are not seasonal in nature. Can I say we always assume this only? Correct now. Are not seasonal in nature. Means we can assume it is uniformly earned. If seasonal, so then profit will not be uniformly earned. So always we assume this only. The parent company has adopted an accounting policy to measure NCI at fair value. The fair value is to determine at quoted market price. Okay, sir. The given market price of MX is 120, NX is 125. Previous CBS. This question cannot be easier than this. Only you need to understand how to perform this. Correct. But there are how many company? First company name is what? MX na? LX. Then MX. Then NX. Can you say me how much LX has acquired? How many shares? 95%. Percentage. And how much LX has acquired? MX to NX na? 60%. So first working note in this is what? Calculation of NCI. You only say in this we are doing calculation from whose point of view? LX point of view. So NCI in mx will be how much? Can I say 100 minus what? 85, that is 15%. But in nx it will be how much? Can I say 100 minus what? Means what is, just try to understand. Lx will control nx. But how much profit of nx should be transferred to lx? Can I say it should be 85% of 60%? Means balance belong to NCI. Because lx share will be what? 85% of 65. So balance belong to whom? NCI. So when you are calculating NCI NX, it will be 100 minus 85% of what? 60, which is coming how much? 51. So 100 minus 51 is equal to what? So can I say NCI in NX from the point of view of parent company is what? 49%. This you understood? Have you understood this point? Then can I say we should do fair value adjustment, but no fair value adjustment? If fair value adjustment will do as whatever we have done in previous concept. Correct. Then we'll prepare a SONA. First let us prepare SONA of what? NX. We can start with what? MX also. So there are two subsidiaries, the two SONA. Two subsidiaries, the two SONA. The first NX. What is the date of acquisition? What is the date of consolidation? And we have retained earning and general reserve both. Batao. What is the date of acquisition? 30th September 2000. So this is 31st March 2021. Can you give me equity share capital? Give me correct amount. Huh? We are doing NX. Don't give me MX or LX. Equity share capital 1600. Can I say opening balance and closing balance will remain same? Can you give me retained earning opening balance? NX. What is the closing balance? Difference is what? 160. General reserve opening balance 5. Closing balance difference is what? Total. Whether my total is correct? Got it? Now, let us come to whether any abnormal was given, whether any dividend paid, no. Whether any error, no. Is there any time adjustment? Yes. Think and say think, same mistake should not be repeated now. Better write down here 6 months, then you will think. 6 months? So plus minus what? Time adjustment. This is 80, this is 30, correct? This is what? 110. So how much it is coming? 2380. 80, 30, 2490. Correct. Is there any fair value adjustment? No, it is not. There is no fair value adjustment. done. Low. Simple. Super easy na? Correct. Any doubt? If you want to calculate, you can calculate parent company share and NCI share. What is the parent company shares in NX? NCI is 49% nalayak. I'm asking parent company share. It is 51%, 49%. Can you give me 80 ka 51%? 40.80. Then 30. This is how much? 30. 15.30 and bolo. How much this is? 14.70. Can we now prepare working note number 3? Sona of which company? MX. What Sona? Date of acquisition, date of consolidation, post. It is retained earning and general reserve. Date of acquisition is what? 31st March. Post is what? 12 month. Can you give me equity share capital? What is retained earning? Opening balance, closing balance. Is there any doubt? Any doubt is there? Ask me now. Better, you are here to clear all your doubt. This your friend is available after class, after crash batch also. You can ask. I mean, right now you have given fees to me. You have given fees to whom? Ask each and every doubt. Otherwise, the doubt will become what? Poison. Ask me, Ray. I am available with you. What is the doubt? What he is asking? That will be very long method. Correct now. And don't follow that, because ICAI is not following that. First though. And just try to understand. Parent company will take information with that company, and parent company will prepare their consolidation now. They will not think what P has done. This. Practically this method is only applied. And it might happen, practically this S limited is also exempted. So what your previous teacher has done in that way? So then why you are thinking that way? That is first a long method. Second, ICAI is not following that. Third, practically also we don't follow. Fourth, it might happen while they are consolidating, they have done some other thing. We should think from parent company's point of view, not from this company's point of view. Correct? So I will say not correct. Even though your answer may be correct. Your answer may be correct, huh? And so your doubt over now. You ask me, now you're thinking good now? You are feeling good or not? That's why this crash batch is because of that reason only. Whatever doubt you ask me, chalega, I have given the reason. You are convinced with the reason. Now, What is other equity? Sorry, general reserve, opening balance 760, closing balance, difference, total, now any abnormal loss, always think in exam. Don't see what is given the questions. Think abnormal loss, dividend, error, time adjustment. In this, no. In this, no. Any fair value adjustment? No. Means the question cannot be easier than this. Bolo. And this have been asked I think 3 times in exam. Chain holding they have asked 3 times in exam. Means what we require more than this? Practice one question, get 16 marks. Means this is buy 1, get 2. This is buy 1, get 5. Correct na? Question cannot be easier than this. But this question can be complicated by giving all adjustment. Everything given, tam maja aata, but they are not asking that type of question because just try what I say thing na. Students are not able to perform this question in exam, so there is no need to improve it na. If suppose everyone is giving correct answer, na, they will change the question. And why they are not changing answers? Because students are not performing well in this also. Why they are not performing? The reason is not that they are not good student. Exam hall pressure. Small mistake. Believe me, this question every student will do before exam. But how you are reacting in exam hall? If in class also you are not able to give me correct amount. Here to no pressure na. I am with you. You are relaxed na. In exam, to lot of pressure. Because lot of expectations. Your expectation, your family's expectation. I need to pass. Next time I will not be given a chance next time. These are what expectation and worry. And we enter in the exam hall with that worry and lot of expectation. Am I right or not? Because of that expectation now, everything become blank in exam hall. That you should work on. My point is what see a final student, this is okay, practice required, but they should work on how to remove that fear. Exam phobia is most dangerous. And normally I have seen many students fail because of exam phobia. Yesterday I received a call from one of not my student, correct now. The same thing said, sir, I am worried in FR because it is very worse, sir. What I will do? I will say just nothing is complicated. Once you study, first study, then worry. You are not studying, you are saying vast, but study nare. First study, then worry. Acha, first give exam or first worry? I will say after giving exam, cry na, jitna cry. Am I right or not? You want to cry na? I will also cry with you. Believe me, I am very much emotional. I am so full emotional. You want to cry? You want to cry? You want to cry? Come, we'll have a competition after exam. I will also cry with you. But after exam, cry. Why you are crying before exam? Before exam, only prepare. Don't think about results. After exam, you may find out, yes, it was not a good exam, let us cry. I will also participate in your event. Call me. I will cry better than you. But yes, that is of course, we should cry. Why we should not cry? Because when you cry, you feel happy, you become relaxed. But not before exam. And normally students panic before exam. Don't panic. This is simple. And One more thing I want to say, CA is not the end of success. You become CA, every day will be one competition. What do you think? You become CA, then life will become very happy. And there are many person who has done a lot of things without becoming CA. I know one of my friend. I'm not saying don't leave. Don't leave. This is your what? This is your dream. You should become CA. Don't leave it. But it is not the end of life. CA is not the end of life. But why to panic? Why to panic? There's nothing to panic. Give exam, okay. You perform well, you'll pass. If you not perform well, 1 second will give exam. I'm not saying that you should not pass. Don't take me wrong way. But I'm saying don't panic before exam. If you panic, even though you study well now, you will not be able to pass. From my point of view, 60% student to fail because of this reason. Panic, panic, panic. I have seen a lot of good students who are not able to perform in exam. Lot of good student. You might be also good student, but you need to perform in exam, na? Am I right or not? So that's why I'm saying, ignore everything. Ignore your circumstances. My point is that today you are doing revision. Today you started preparing for next attempt. Suppose today. Suppose you have not done anything in past. Today you started. Start. How much you can do, do. You can give your best. You can't give more than best. Bolo yes or no? Give your best. Let other decide the result. You can give your best. If you are not giving your best, then that is not correct. Bolo yes or no? Am I right or not? Correct? I mean, just try. I'm just giving one example. In class, if I am coming, even one student is there, now I need to give best or not. I am not worried about a student. I am not worried. For me, one student is also important. For me, 300 students also is important. I am not worried. You should not be also worried. This is what the point. If you can understand, and believe me, if you prepare without any negative thoughts in your mind, and you enter an exam hall without negative thoughts, there is a high probability that you will pass. High probability. There is virtual certainty, There is one time India studies a virtual certainty. So there is a virtual certainty that you will pass. I can't give 100% certainty, but there is a virtual certainty that you will pass. If you go in exam hall without any fear, without any tension, Achha, do you play any video games? Mobile games? You play what? Nothing. Cricket? Achha, in cricket, every time you go for batting, you will hit 6. You will out also, na? When you out, whether you are worry. No, next time once again you will go, you will hit 6. Why to worry? Same thing, it is also a live game. In video game you play, every time you will become successful. Even though you fail, then also you become happy, na? You are enjoying it. Because maja aa raha hai. In exam also you should feel maja. Maja aane do. If you will get maja, na, yes, maja aa raha hai. Yes, I am getting that enjoyment in writing down the exam. No trouble. This is the lesson I am saying. This is a lesson of life. If you understand this, you will pakka pass. What is the difference between rank student and pass student? This is the fact. Rank student is not intelligent. They are not highly intelligent, because CA is done by average student only. If we are exceptional or extraordinary, we will go for science, na? We would have become scientist. We are average student. बोलना yes or no? Therefore we came in commerce ना. Otherwise तो we adopted what? Physics, chemistry, biology, doctor. अरे बोलना रे. We are average. We don't want to. मतलब, are you getting? We are average student. So every students are average. But what is the difference between pass and fail, or rank and pass? That difference. We overcome that panic. And we जो pass होते हैं, we because sometimes we fail also. We can't overcome what our panic. That we need to understand. Only that much. Okay? I just want to say you this point. Therefore, I have taken time on this. But have you understood this? So let us complete it because now lunch break is going to happen. I am also feeling hungry. Chalo. This much you understood? No. What is after this? We'll prepare what? Goodwill now? Now only I need to explain some point in goodwill. Working note number 3, no doubt. Working note number 4. Now can there will be 2 goodwill. So for MX and NX. MX to very easy. MX batao what is PC, fair value of consideration paid. Means investment which is coming in the books of parent company. What is PC? 2620 minus what? Fair value of INA. Fair value of NCI. You can say 20% of shares was held by NCI. So what is the total number of shares? Can you give me? Total number of shares in the books of. So this is shareholder share capital. 2000. 2000 na. Means divide by 100 means 20. What is the total number of shares? Are bolna re. 2000 divided by 100, 20. 20 into 20% into what is the fair value given? Fair value of shares given in the last point. Last point. 120 per share. You will do 120. What is the fair value of NCA? Batao. 480. This you have understood? Total. Can you give me the total? $3,100 minus fair value of INA. How much given? In MX. In MX. This is MX. 3240. 3240. What is gain on bargain purchase? How much? 140. Understood. Have you understood this point? Correct. Now coming to NX. Now in NX, only one point I need to explain. Look at the PC. If you see this is PC. PC is what this? 1350. 1350 is paid by MX to gain control over NX. But can I say this is one investment and this belong to an LX, but only how much percentage? 80% na. Means from LX point of view, to obtain control over NX, 80% of 1350 is paid. Are you able to understand? 1 second. From LX point of view, 80% of 1350 has been paid to acquire control over NX Limited. So if you are saying PC, take 80% of 1350. 80% of 85%. 80% na. So I have taken wrong then. This is not 20% then. Then this will be 15%. 85% is there. Oh, my mistake. Sorry, my mistake. Then you should say me here 15% na re. This is not correct then. How much? Actually with emotion story na I forgot everything. I become emotional na. 360. Then this become how much? 2000. Then this is how much? How much? 260. Now correct na? 15% was NCI na? So now this will be 85% of what? 13. How much? 11. This you understood? Now what was the NCI in NX? 49%. NCI in NX is 49%. Already we calculated what is the total share capital. 1600 means 16. So we'll say 16 into what? 49% into what? 125. This is how much? How much? 980. Total 2127.5. What is the fair value of INF in NX Sona? What is gain on bargain purchase? Huh? What is the total gain on bargain purchase? $512.5. This you understood? Now we'll do what? Next working note, other equity means we will have retained earning, general reserve and NCI. However, they have done NCI separately. We can do together also because we want NCI. In working note, suggested solution, they have done NCI of NX separately, MX separately, but not required. If you want to do that, you can do by your own. Chalega? That's good. But what is the balance of retained earning in parent company balance sheet? 1030. General reserve 11. Can I say NCI will be the total of these two? You want to do separately? Or can we do total? NCI will be total of these two. 360 plus 980. 1340. Now, first can I say we'll take MX Sona. Can you give me share in PL and share in general reserve? Share in PL tha na? This 120. 120 will be allocated in which ratio? 85:15. Can you give me 85:15? 102 and 18. Then general reserve allocate 42.5. This is correct na? Then can we give me NX share in PL and share in general reserve? .40 and 39.2. Then 15.3, 14.70. Can you give me the total? Double 1.80. Then how much? How much NCI? One 440. This much you understood? So can I say only one change is done here? Apart from this, everything is same. Correct. Now, the last point, listen. Last point, listen. Okay. Last point, what ICAI says, I say now there is one mistake. I will not say what is the mistake, I'll just do what ICAI has done, because you need to do that only. In my regular class also I say do this only, because we need to get marks na, correct? Because we have taken 85% of 1350, so 15% is ignored, so your balance sheet will not match with 15%. You do balance sheet, your balance sheet will not match. So what ICAI has done to correct it, they have reduced what from these 15%. Why, I can't explain, because that is 100% wrong. If you want to understand why it is wrong, you can listen my one video in YouTube. I have done entire discussion of chain holding there, but don't do before exam. Huh? Don't listen that YouTube video, okay? But there is some mistake. But of course, balance sheet will not tally. You can understand why balance sheet will not tally, because you have taken 85%. Where is the 15%? 15% difference will come now. Of course, it will come. If you want, you can check. Difference will come. But they have rectified that by taking one less. Share of NCI in investment. How much? 15% of 15% of 1350. How much? 206. Exactly 206. 202.5. 202.5. This is minus. Kasam khao. You reduce it. Kasam kha lo. Reduce it, huh? Chain holding, that difference. You have taken 85%, 15% reduced from what? NCI. Magnification. This point only I can't help you right now. Why this? Because this is actually not correct. But to get marks, we will do this only. Correct? Now just check now whether all our answer is correct or not. Check kar lo. This solution check karo. Let us check whether our solution is correct or not. Batao. Batao. What they have done first. Goodwill, how much we have calculated? Gain on bargain purchase. Correct? Correct now. NCI, how much we calculated? This is also correct. You can see NCI share in investment deducted. Correct now. Then reserve is how much? Reserve. This is also correct. Retained earning how much? Huh? 1190. Plus minus mistake. This is calculation mistake. I will die. Give me poison. 1172.8. 1172.8. Now can the balance sheet can be prepared? Balance sheet you can do plus is book value plus minus adjustment. Book value plus minus adjustment. Only there's one intra-company debt that will be cancelled. Bills receivable wala point hai na, that will be cancelled. Be careful about that. Correct. One doubt will come, sir, whether notes to account is required. I will say, if time permit, give notes to account. If time does not permit, ignore it. Maximum they will deduct 2 marks. But can you see, if you want to write down this much, better you do 10 marks question. If time permit, do it. Otherwise, ignore. Means you should be very speed now. And this notes to account is very easy. Plus. You can see notes to account what they have done. Property, these plus. These plus. This took everyone can prepare. So what I am saying, notes to account in this chapter, if time permit, do it. If time do not permit now, I will say better do 10 marks question. That is more important. Maximum they will deduct 2 marks, and if I am checking, I will not deduct marks. So that depends upon who is checking your paper. Correct? But can I say, if you are giving 10 minutes in this notes to account, better I will say solve 10 marks question. Which one is more important? Preparing notes to account or solving 10 marks question? We should be smart in exam hall also. Correct? So I will say, if time permit, you are good in writing with your speed is very good, then you can do it. Chalega? So chain holding also completed from my point of view. Okay, sir? I think you understood. Can we take break? So from my point of view, you can see consolidation all point over. Control definition I will not do. Control definition can you do by your own? These all points, other points are not important from examination point. Chain holding I have done. Correct. This all miscellaneous point is given. You can read by your own. From this no question has been given. Meaning of control. Can you do it by your own? Because control definition is theoretical point. So I am assuming that you can do it by your own. Chalega? Control definition. There are 3 elements: power over investee, exposure to or right to variable return from his involvement with what? Investee, the ability to use the power. Then there is some explanation given about power over investee. Investee has an existing right which gives current ability to exercise to direct the relevant activities of the investee. Relevant activities means which significantly affect the what? Significantly affect the return of the investee. This I think you have done now. So please do it by your own. They may ask one case study based on this also, but till now not ask any question based on this. So I am assuming that you can do it by your own. Then we will start joint arrangement. So after break there are two major points: joint arrangement and Ind AS 28. I will say 1 hour more will be required. After 1 hour we'll take some other Ind AS. Then this chapter will be completed. So can we take break? Lunch break? Okay. Can we start once again, everyone? Yeah. So before break we completed Ind AS 110. Correct? Now let us start for consolidation Ind AS 111. Ind AS 111 is joint arrangement. Joint arrangement says is as per Ind AS 111, joint arrangement is a arrangement when 2 or more than 2 parties have joint control over another entity under contractual agreement. Means when I say subsidiary, in that entity will have what? Control. But when 2 or more than 2 entities have joint control over one arrangement, that arrangement is known as what? Joint arrangement. So can I say in this there are 2 key points. One is joint control, one is contractual agreement. Means to satisfy the condition of joint arrangement, there should be contractual agreement and there should be joint control. Understood? I hope it is very simple. Correct. Now, when I say joint control, so joint control means there must be collective control. Collective control of 2 or more than 2 parties, but it is not required at all parties. For example, A, B, C, D, and there is one entity A, B, C, D. So either all parties will have joint control, or ABC will have joint control, or AB may have joint control. Then also it will be joint arrangement. But if only A have control, then that arrangement will become subsidiary. Understood what I am saying? So first, we can say there must be joint control. So collective control is required, and joint control means what? There must be unanimous decision. Means to take decision, all the parties need to be consented. Correct? All parties consent is required. That is known as unanimous consent is required. Correct? I hope simple. Now for accounting treatment, we have classified joint arrangement 2 type. One is known as joint operation, one is known as joint venture. Now what is the meaning of joint operation? Joint operation means whereby the party that have joint control, the party who have joint control, correct now, have a right to assets and obligation for the liability relating to that arrangement. Means the party have a right to the asset and obligation for the liability of that arrangement. Means the party have a specific right on asset and a specific obligation on liability, then it become what? Joint operation. But when the parties that have joint control have right to the net asset, have a right to the net asset of that arrangement, then it become joint venture. Means in simple word, if I will say, just try to understand. Suppose there is one joint arrangement. There is one asset 1, asset 2, asset 3, liability 1, liability 2, liability 3. Correct now. And suppose there are two parties A and B. Now if A has right on asset 1, B has right on asset 2. Correct? Quite possible. And AB has joined, this A3 is jointly held. Quite possible. And suppose L1, the obligation is of A, L2 obligation of B, and suppose L3 AB have jointly, this is jointly incurred liability. So this is joint operation. This is joint operation because the parties who have joint control have a right on asset and obligation on liabilities. But if I say in this way, this is one joint arrangement and there are asset and liability, so no party have specific right on any assets. Means all the parties have residual interest in this net asset. Then it is what? Joint venture. Joint venture. Understood? Correct. Now, what India's 111 says that if that joint arrangement is unstructured, unstructured means it is not a separate legal entity. Unstructured means a separate legal entity is not created. Suppose we joined together, started construction of road without creating any entity. So this is also joint arrangement, but unstructured. So unstructured will be always joint operation. It cannot be joint venture. But if a separate entity is created, we become a partner, we created a partnership firm. So that partnership firm becomes structured because it is through a separate vehicle, separate entity. So that structured entity may be joint operation, may be joint venture. Means there is no doubt about unstructured, but doubt will come about structured. When structure will be joint operation, when structure entity will be joint operation. For that they have given some condition. What they said, if any one of the following condition is satisfied, it is joint operation, otherwise it is joint venture. So what they want to say, does the legal form give the party right to the asset and obligation for the liability? Legal form. Legal form we can say in case of company it can be articles of association. So does the legal form give the party right to any asset or obligation for any liability? If yes, it is joint operation. Of course it will meet the definition. If no, we need to go to some other condition. Well, thus the terms of contractual arrangement, of course there will be some contractual agreement also, keep the party, means specify that party have a right to the asset or obligation for the liability. Yes, if yes, it is a joint operation. Otherwise we need to go to condition number 3. Last point what they say, last condition. Thus the arrangement so designed that activities mainly provide the parties, means what they want to say, the arrangement is so designed that the activities of that arrangement, correct now, mainly provide with the party with an output. Means that arrangement is created to give output to what? The parties. Correct? Means parties with an output, and so that it depends upon the party on a regular basis for settling the liabilities. Means suppose one arrangement is created, so whatever output produced by that arrangement will be transferred to what? Joint venturer. Means to the parties. Means that output will not be sold to third parties. So it means can I say this joint arrangement will depend upon these parties only for settlement of liability. So it is joint operation. It is joint because the intention is to give benefit to what? Co-venturer only, co-parties only. Correct? So it will be joint operation. If any one condition is not satisfied, means if all the conditions are not satisfied, then it will be what? Joint venture. It means can I say for accounting treatment we need to first find out whether it is joint operation or joint venture. The accounting treatment of joint operation is given in Ind AS 111 only. So what Ind AS 111 says that for joint operation means accounting treatment for interest in joint venture, first joint operation, whether unstructured or structured, it can be unstructured or structured. Correct. So what they are saying, in the individual or separate financial statement of joint operator, means the parties who have joint control over joint operations are known as joint operator. So we are doing accounting treatment in the books of joint operator. So that joint operator will recognize its asset including the share of any asset held jointly. Means if I say I have given this example now. So in this example, A will recognize what? In this example, A will recognize asset 1 and suppose the ratio is 50%, 50%. So 50% of asset 3 in their financial statement. Similarly, A will also recognize liability 1 and 50% of liability 3. Understood? So what they want to say? They will recognize its asset including its share in any asset which are jointly held. Its liability including its share of any liability which is jointly incurred. Its revenue including any share of revenue which are jointly earned. Its expense including any share of any expense which are jointly incurred. Means very simple. Correct. So can I say this will be included in the individual financial statement of what? Joint operator, or separate financial statement, individual financial statement when that entity is not a parent entity. When we say individual financial statement means that entity is not a parent entity. If they are preparing consolidation finance, if it is a parent entity, then they will prepare separate financial statement. Are you getting what I am saying? Correct. Now can I say if this is already included in their individual financial statement or separate financial statement, so in consolidation no treatment required. Automatically from individual financial statement or separate financial statement, it will come where? In consolidated financial statement, means no adjustment required in consolidated financial statement. Understood this point? Correct. Joint operation you understood. Now what will be the accounting treatment for joint venture? Now for joint venture what they said, in separate financial statement, investment in joint venture will be recorded as per Ind AS 27. Ind AS 27 says that investment will be recorded at cost price or as per Ind AS 109. Correct. So investment in joint venture will be recorded as per Ind AS 27 in separate financial statement. And what Ind AS 27 says that either at cost price or as per Ind AS 109. What Ind AS 109 says means either at FBTPL or FBTOCI. You remember? Means they have given two model, cost model or fair value model. Either cost price or as per Ind AS 109. And in consolidated financial statement of joint venturer, investment in joint venture will be recorded as per Ind AS 28, means by using equity method. Means to understand equity method we need to go to which Ind AS? Ind AS 28, and this is only important from examination point of view. Understood? Yes sir. This point you understood? Correct. Means just try to understand what they want to say. Suppose there is a joint operation and A, B and C are three parties and this AB has joint control. Correct. So we have understood what need to be done in the books of A. We have understood what need to be done in the books of B. Now question arises, what journal entry will do in the books of C? Means case C is a party to the arrangement but not having any joint control. So what will be the accounting treatment of the parties which is not having any joint control in that joint operation? Are you getting? So what they want to say? Accounting treatment by an entity that is a party to the joint operation but does not have joint control. Have you understood this point? So what they want to say? If that party, a party that participate in but does not have joint control of a joint operation, so we need to ask whether that party has right to the asset or obligation for the liability relating to joint operation. Means whether that party have a right to specific asset or obligation for liability. If yes, then whatever we have done for other joint operators, same thing will be applied. Means account as per the requirement mentioned above for joint operator. Understood this point? Have you understood this point? Means journal entry means accounting treatment in the books of C will be done as what we have done in the books of A and B. Means they will also account is asset or share in the asset which are jointly held. Understood? Its liability or share in the liability which are jointly incurred. Its expense or share in expense which are jointly incurred. Understood? Correct. But if suppose no, means that party does not have a right to the asset or obligation for the liability, then what they want to say, account as per applicable Ind AS, means apply Ind AS 109. Ind AS 109 means that investment will be recorded in the books of C in my example as per Ind AS 109. Understood? Similarly, accounting by an entity that is a party to joint venture but does not have joint control, means what they want to say, just try to understand. Correct. Means suppose there is a joint venture and there are A, B, C, and this party have joint control. Correct. So this party have a joint control. So in SFS they have applied which Ind AS? Ind AS 27. In CFS they have applied what? Ind AS 28. Correct. Now this C is a party to joint venture but does not have joint control. Correct? Understood? Means can I say these are the joint venturer but he is not joint venturer, because party which have what? Joint control will be only known as joint venturer. Correct? So what they want to say in this case, whether the party has significant influence over joint venture, means what they want to say, if they do not have joint control, but whether they exercise significant influence over joint venture. If yes, then apply Ind AS 27 for SFS and Ind AS 28 for what? CFS. Because significant influence, so then can I say the entity means the investee will become associate. Are you getting what I am saying? Correct. So whether the party has significant influence over joint venture, if yes, then whatever we have done for A and B, do for C also. But no, then apply the requirement as per Ind AS 109. Means investment will be recorded as per Ind AS 109. Understood? Correct. This question have been already asked in exam. Similar question have been asked in exam. Understood? Correct. Then special transaction with joint operation. Special transaction with joint operation. What they want to say? Accounting for sale or contribution of asset to a joint operation in separate and consolidated financial statement of joint operator. Means what they want to say? Suppose there is one joint operation and there is one joint operator. So there may be some sale by joint operator to joint operation. So what will be the accounting treatment in the books of A for this? That we need to understand. Have you understood? Have you understood this point? What we are discussing? Joint operation and this joint operator means any asset is sold by joint operator to joint operation. Quite possible? Quite possible? Means let us assume the cost price of the asset is sold is 100 at a profit of 20. So it become what? 120. Understood? Then it will be the cost price of what? 120. Can you see, if this become asset of joint operation, then again it will come in the books of A. Because suppose A is holding what? 40% share. So 40% again will come. Means can I say they are actually transferring only to the extent of 60%? Means you should recognize gain only to the extent of 60%. You should recognize gain or loss only to the extent of 60%. So what journal entry we should do? Batao. Can I say bank will what? 120 into 60%, how much? 72. To asset will be how much? 60. And how much gains should be recognized? How much? How much? 12. Understood? This point have you understood? Bolo. So this journal entry will be done in the books of A. Means they can recognize only gain to the extent of other party share. Correct now? Understood what they want to say? Let us check. When a joint operator sells any asset to joint operation, it is in effect transacting with the other party to the joint operation, hence the joint operators shall recognize gain or loss resulting from such transaction only to the extent of other party interest in joint operation. Understood? Have you understood this point? Correct. Can I say it can be reverse also? Accounting for purchase of asset from a joint operation, it can be reversed. Now joint operation has sold to A, means joint operator has purchased. So suppose this is the cost price 100, profit is 20, so sale price become 120. Correct? Understood? Correct. So can I say this was already in the balance sheet of A? Means already it was in the balance sheet of A at what? Suppose 40%, they are holding 40%. So 100 ka 40% means it is already appearing in the balance sheet of A. Asset is coming what? 40 or not? Means they are purchasing only what? 60%. They are purchasing only 60%. Are you able to understand what I am saying? Bolna re? Correct. So what journal entry they will do? Asset account debit. How much? 60. To bank how much? 60 only. Understood what I am saying? This journal entry we should do. Have you understood this point? Bolo. This purchase entry na? Oh sorry, not my mistake. 120 ka. 120 ka 60% how much? 72. And 72 will come? 72 and 72. Correct? Yes sir. What they have said check karenge. When a joint operator purchases any asset from joint operation, it shall not recognize its share of gain or loss until it resell those assets. Means they will not recognize any gain or loss, its share of gain or loss. Are you getting what I am saying? Means out of 20, 40% belong to what? A. So that will not be recognized. So they will recognize only to the extent of what? Because out of 20, 12 will be recognized. So they have said you can see 60 plus 12 they have purchased. Understood? Means till it is sold, till the entire asset is sold by this party to other party, they will not recognize any gain or loss. Means just try to understand. After this journal entry, how much asset will come? 40 plus 72 means how much? 112. You can see they have not recognized their share of profit. They can't recognize now. So if suppose now they have sold at rupees 120, so now they will recognize at rupees 8. Now suppose they have sold this asset to some other party at rupees 120, so they will recognize what? 8 rupees gain. Understood? That is only said. I hope you have understood this also. Correct. So with this we completed what? Joint arrangement. I hope you have understood this. Now whether this type of questions will come or will not come, that I don't know. Because if they will ask this small question, that will be 4 or 5 marks question. I was questions have been given in ICAI study material regarding this. But very easy. You can practice that question by your own. If they will asked, that will be 4 marks, 5 marks question, not more than that. Correct? Isliye from my point of view, they may ask also. Sometimes what happens, they ask a question of consolidation, what? 15 marks, 5 marks question will be of this. So 15 plus 5, it become 20 marks question. Now, what is important? Ind AS 28 is important. Correct? So what is the Ind AS 28? Investment in associate and joint venture. So I hope you have understood. Associate will be also accounted as per Ind AS 28. Joint venture is defined where? Under Ind AS 111, but accounted as per Ind AS 28. So can you say the meaning of associate will be given under Ind AS 28 only? So what is the meaning of associate? An associate is an entity in which investor has a significant influence. What is the meaning of significant influence? Significant influence is the power to participate in the financial and operating policies of other entity. How will understand there is a power to participate? There is presumption given. Presumption means one presumption has been taken that if any entity hold 20% or more than 20% share ownership of other entity, it is presumed that that entity exercise significant influence over other entity. So there is a presumption taken if they are holding 20% or more than 20% of voting right. Understood this point? You can read this by your own. Now we need to start equity method. We need to start equity method. So can you say equity method will be commenced from the date on which it become an associate or joint venture. So equity method will commence from the date when the investee become what? Associate or joint venture. Correct. So first point, whenever there is an equity method, on acquisition date, we need to first calculate goodwill or gain. Goodwill or gain. I have said goodwill or gain. I have not said gain on bargain purchase. Gain on bargain purchase will only come in case of Ind AS 103. What I said, goodwill or gain. I have not said gain on bargain purchase. Correct? Goodwill or gain means what they want to say. Just try to understand. Suppose this is the date when any investee become an associate. Correct? Means investor has acquired 20%, or let us take 30%. We need to find out what is the PC. PC we need to find out for 30%. Suppose 3 lakh paid. Suppose 3 lakh paid. Can you see we need to find out fair value of INA? Fair value of INA of what? INA of associate on this date only. Suppose the fair value of INA is, suppose let us assume 12 lakh. Suppose 8 lakh. Fair value of INA is what? 8 lakh. We will take 8 lakh 30%. Can you say this will be given in the question? If not given, we know how to calculate this because we have done SONA. SONA may we have done equity approach. Same thing we can apply. But it is fair value, not book value. The same fair value adjustment is also required. So this is fair value of INA of associate on the date when it become associate or joint venture. We don't call it date of acquisition, but we can say date of acquisition also. We just say on the date when investee become associate. Date of acquisition is normally used for when control is obtained. Then we say date of acquiring. We are acquiring. Correct now. We don't say date of acquisition. We can say date of acquisition for understanding. Let us write down date of acquisition. Now, okay. Correct now. But normally I am in habit to use correct terms. Because we should use correct terms now because we are chartered accountant. We are expert in this accountancy. If you are using wrong terms, it will give wrong impression now. So this is not date of acquisition. Date of acquisition only has been used in Ind AS 103. Are you able to understand my feeling? Yes, sir. Look at 8 lakh ka 30%, how much? 2 lakh 40,000. Correct. So how much goodwill come? 60,000. So what Ind AS 28 says that this goodwill will not be recognized. Will not be recognized. Will not be recognized. Why? Why? Because can you see this carrying amount of investment include goodwill? You can see this is nothing but 2,40,000 plus what? Plus 60,000. So already we have recorded investment and the carrying amount of investment is inclusive of what? Goodwill. So there is no need to recognize goodwill separately. We will only identify and disclose it but will not recognize it. Understood? So can you say, whenever questions come, so on the date of acquisition, calculate goodwill, but do not recognize it, only disclose it. Understood? Let me take one more example. Suppose PC for 30% is what? 3 lakh. And the fair value of INA, let us assume 12 lakh. So 12 lakh ka 30% how much? So now it is a gain. Gain is what? Gain is 60,000. This is not gain on bargain purchase. Gain. You can see now this investment does not include a gain, because actually the INA is what? 3,60,000. So what Ind AS 28 says that we should recognize gain and we should increase it by 60,000. Correct now. So what they want to say, in equity method, investment represent proportionate share of fair value of INA of associate. So investment is 3,60,000. So investment should be also 3,60,000. Are you able to understand what I am saying? Are you able to understand? Correct. So can I say, in this case, gain will be recognized. So how to recognize gain? Will increase investment, and this gain will be transferred to what? Capital reserve. This gain will be transferred to capital reserve. Will pass this journal entry on the date when the investee become associate or joint venture. Understood this point? Means can I say, on the date of acquisition, calculate goodwill or gain? Goodwill will not be, but gain will be, and transfer to capital reserve. Understood? Correct. Now we can read. Any difference between cost of investment and entity's share in the net fair value of investee's identifiable assets and liability is accounted for as follows. Goodwill relating to associate of joint venture is included in the carrying amount of investment. Goodwill will not be recognized and it will be only identified and disclosed. It is a question of amortization of goodwill. Will not amortize goodwill. Will also not impair. It will not be impaired also. No impairment also. This goodwill will not be impaired also. No amortization, no impairment of such goodwill, because we have not recognized goodwill. The question of impairment of such goodwill will not arise. Correct. But gain, if any, is recognized directly in equity as capital reserve in the period in which investment is acquired. Goodwill or capital reserve will be calculated as under. Calculated, I have written calculated. I have not written recognized. You need to calculate it, The same formula is given, check karo. Understood? Now once you have done initial recognition, how to do subsequent recognition, that we need to understand. So for subsequent recognition, I have just given one statement. Normally in exam we will use this. But to understand this, we need to understand journal entry. Correct. So accounting treatment for equity method in what? In CFS. Means whatever we are doing in CFS, not in separate financial statement. So first, on the date of acquisition, what journal entry? Investment account debit to cash or bank. Then for recognition of goodwill or capital reserve, goodwill will not be recognized. Capital reserve will be recognized. What journal entry will do? Investment to capital reserve. Correct. Then subsequent. For recognizing the share in profit or loss, means can I say the share, the profit or loss of associate or joint venture will be recorded in the books of investor to the extent of their share. Suppose they earned 1 lakh. To be recognized only what? 30% of 1 lakh, if 30% is my share. It is as simple as partnership firm. Means we are doing journal entry in the books of partner. Associate become partnership firm. We will do journal entry in the books of partners. The partners will recognize their share in profit now. So their investment will increase and share in profit will be recorded. So if associate or joint venture makes profit, what journal entry? Investment account debit to share in profit from associate. This share in profit will be transferred to what? PL. From PL it will be transferred to what? Retained earning. Are you able to understand what I am saying? Understood? Similarly, if associate makes loss, what journal entry? Share in loss from associate to what? Investment. This will be transferred to PL. From PL it will go to what? Retained earning. Correct. Similarly, can I say for recognizing the share in OCI? If gain, what journal entry? Investment in associate to share in OCI from associate or joint venture. Can I say this will go to OCI? And from this OCI that will go to other equity. Other equity means separate component equity. It can be revaluation surplus, it can be FCTR, it can be any other equity, as the case may be, depending upon the nature of OCI. Depending upon the nature of OCI. Similarly, if OCI is a loss component, then reverse entry, what journal entry? Share in OCI from associate to investment in associate or joint venture. Correct. Understood. Then for dividend received, again dividend received is nothing but drawing in case of partnership firm. Just like a drawing now, means we have withdrawn the amount. So profit already recognized. Suppose 1 lakh profit already we recorded. Out of 1 lakh now we are getting some dividend. It will reduce investment only. So as per Ind AS 28, whatever dividend amount received will be deducted from investment, because that will decrease my investment. So what journal entry? Cash account debit to investment. Cash account debit to investment. This point have you understood? Dividend received journal entry. But there is one point that I need to explain. I'll once again come to your doubt, don't worry. Correct. Now, just try to understand. Suppose this is separate financial statement. So investment in associate will come at cost price. Correct? Understood? Now, separate financial statement means Ind AS 27. Ind AS 27. Now, what Ind AS 27 says that any dividend received will be transferred to PL account. Means, suppose dividend received is 20,000. Suppose dividend received 20,000. So, they have already transferred to PL. Already transferred to PL. Means, what journal entry they have done? Cash account debit to dividend income, and dividend income is transferred to PL, or retained earning we can say. Retained earning. Now from this separate financial statement we are preparing what? CFS. Correct. Understood now. So investment already coming 1 lakh. Now as per Ind AS 28, this whatever dividend received will be deducted from what? Investment. So but the what journal entry we should do? Already we have done this journal entry. Means cash is already recorded. So what adjustment entry is required? Investment will decrease. Entry batao. Means retained earning account debit to investment. So that only I have given. From exam point of view, if CFS is prepared from what? SFS, then following adjustment is recorded. Retained earning account debit to investment. Have you understood this point? Have you understood this point? Correct? Bolo. Okay. Now, can you say we need to also think about fair value depreciation adjustment? Means on the date of acquisition, when we have calculated goodwill or gain, so we have taken fair value by name. So due to that fair value by name, additional depreciation should be charged in post acquisition, post period. The same concept. Can I say additional depreciation will reduce profit? If it will reduce profit, it will reduce what? Share in profit. So what journal entry we should do for additional depreciation? Our share in profit reduce. So journal entry will be share in profit from associate to investment account. Correct? Understood? Similarly, if there is some saving in depreciation may also come. When saving in depreciation will come? When fair value is decreased. Means suppose the carrying amount is 1 lakh and the fair value is 80,000. So can you say in post period we will save some depreciation? So saving in depreciation will increase our profit. What journal entry we should do? Investment account debit to share in profit. Are we able to understand this point? Have you understood this point? Correct. Yes, sir. Then next point, for elimination of unrealized profit. This is thoda sa interesting. Elimination of unrealized profit. So once again there can be two type of transaction, downstream, upstream. Correct. Now suppose there is a parent company and associate. Parent company means we can say investor also. An investor has sold some goods to what? Associate. Let us take cost price 100, profit 20. It become 120. This become what? Cost price. Means can the closing stock of associate include what? Profit of investor. This you understood? Acha. Means can I just try to understand? Why you are laughing? Chalo. Now, case this is the closing stock of associate which include profit of what? Investor. Now my question to you all, in CFS, whether this closing stock will come. Bolo. What will come? Investment in associate will come. And can I say investment in associate represent, suppose this is 30%. They hold investment is suppose 30%. Huh? So can I say it will represent 30% of INA of associate. Means this investment will include 30% of stock of associate. Means this will include 120 ka 30%. 120 30% how much? So 36 will be included, and this include how much URP? How much? Bolo, I'm asking you. This 36 is what? 30% of stock 120. So this 36 include how much URP? How much amount? 30%. I am not able to understand what you are saying. Amount bata. 6. So can I say this investment include unrealized profit of 6? Are you able to understand what I am saying? Means can I say the investment is overvalued by 6? So if we need to eliminate 6 from investment, what journal entry? Bolo? Investment will decrease or increase? So why you are saying investment account debit? Means it is a profit of investor. Means retain earning account debit to investment. Have you understood this journal entry? With unrealized profit. Have you understood? This journal entry you have understood. So can I say whenever downstream transaction, the journal entry is what? Retained earning account debit to investment. Have you understood? Now beautifully I explained. One second. So beautifully I explained. One second. But chalo theek hai. I'm happy that you have not understood. Can I explain once again? Correct. One second. What I am saying, where is this? This stock is of associate, include profit of investor. My first question, whether stock will come in consolidation, whether stock will come in CBS. No, stock will not come. What will come? Investment in associate. So what is this investment in associate? This is nothing but represent 30% of INA of associate. So INA means it is inclusive of stock of associate. So can you say this investment include 30% stock of associate? 30% stock means 30% of 120. 30% of 120 means 36. So this investment include 36 or not? And this 36 include how much URP of a investor? 6. So this investment is overvalued by what? 6. So we need to eliminate that profit now. So if you want to eliminate unrealized profit, you should reduce what? Investment. And this profit of investor already transferred to PL account. So journal entry is what? Retained earning account debit to investment. Have you understood? Bolna rahi? I hope you have understood. Correct? Understood? Correct? I need to see there also na, whether they have understood or not. They are not asking questions, then I will proceed. But doubt, ask me. Then you discuss. Have you understood live class? The only consolidation we have done, right? Means can I say this journal entry you will do? First find out annualized profit, then do 30%. Same answer will come now. Correct. Now let us come to upstream. Upstream you will give me journal entry. I will not give. Huh? So now ulta. Associate has sold to investor. Now cost price 100. Profit 20, it become 120. This become cost price stock. Means 120. Look at this stock include now what? Profit of associate. Means in CBS already the stock is coming or not? But this is including profit of what? But how much we should eliminate? We should decrease profit by how much? Six only. Why? Because can you see this is the share of profit of a, this is the profit of which is already recognized by whom? So first share of profit they have already passed one journal entry, investment to share in profit. Bolo yes or no? 6. Means for the sharing profit they have already passed one journal entry. Means they have already recognized 6. But this 6 is included where? In stock. What journal entry we should do? The sharing profit will be decreased by 6 to what? Stock. 6. Have you understood this point? But this sharing profit will be ultimately, we can say, retained earning to stock from CBS point of view. But this will reduce sharing profit to stock. So whatever sharing profit you already recognize, that should be reduced by 6. Are you able to understand? Means can a downstream transaction will affect investment, but upstream transaction will not affect investment. That will affect stock. When there is a whenever there is a downstream transaction, so two affect retained earning and investment. Upstream transaction, then retained earning and stock. याद रहेगा खत्म करो. Downstream transaction normally student mistake. Downstream transaction, what is the effect? Retain earning to stock, retain earning to investment. Downstream, they will ask downstream only. Chalega? Yes sir. So for elimination of unrealized profit of unsold stock or asset, if downstream retain earning to investment with proportionate share of URP. For upstream transactions, sharing profit from associate to stock. Understood this point? Now, I am ignoring those points from which they have not yet asked any questions. Right? Chalo. Now, the next point what I was going to say, that intercompany debt. Can I say we are not incorporating any assets and liability, individual assets and liability of associate. The question of cancellation should not arise. Therefore, intercompany debt will not be cancelled. Be careful about this point. Be careful. Danger, huh? Intercompany debt will not be cancelled. Correct? This much any doubt? No doubt. Now we can take some question. If you have understood this much, we can take question. Means all the questions can be done. All the questions can be done. Can we take one question? But before that, let us come to that statement. So this will help you in solving any question. Now, this. In exam, normally if they ask, calculate value of investment as per equity method, we'll use this statement. Will not pass journal entry, will do plus minus. So can I say, now I hope you'll understood. Cost price of investment including goodwill will come. But if there is a gain, we should add capital reserve. Can I say, after adding, this will become value of investment as per equity method on the date when investee become an associate or joint venture. So after have you understood this much? So what I am saying, after adding this, you will get value of investment on the date when investee become associate. I am coming to your point, don't worry. Then we'll do plus minus investment share in PL. Plus minus investment share in PL. If profit then plus, if loss then minus. Then plus minus investment share in OCI. Correct. Then minus dividend received from associate or joint venture. Minus dividend received, deduct from investment. Correct. Then plus minus fair value depreciation adjustment. Additional depreciation, then minus. If saving in depreciation, then plus. Then elimination of unrealized profit for which transaction? Downstream transaction. Can I say this will become value of investment as per equity method at each reporting date? This much you understood? Have you understood this point? Correct? Have you understood? So what I want to say, one doubt came, just try to understand. Suppose this is associate. Asset is coming 100, liability is coming 20, and equity is what? 80. And let us assume this is fair value only. Fair value. Okay. Now, you purchase investment 30%, means parent company purchase investment 30%, purchase investment 30%, by paying 28 lakhs. 28 lakhs. So this is separate financial statement. Understood? Correct? Understood. So what Ind AS 28 says, first calculate goodwill or gain. Goodwill or gain. So can I say goodwill or gain will be cost price of investment is 28 minus fair value of INA. So fair value of INA is what? 100 minus 20 means 80. 80 into what? 30%. How much? 24. It means goodwill is equal to what? 4. So you can see this 28 is nothing but what? 24 plus 4, 20, 24 plus 4, and this 24 plus 4 is nothing but, can I say, 30% of INA plus goodwill, because this is partial goodwill now. This, when I am saying this is proportionate method, so this become 30% of this. So can I say 30% of INA plus goodwill will be 28. So can I say this 28, whatever is coming now in PFS we write on investment 28. So this represents 30% proportionate share in INA and goodwill. That I am saying. So this investment represent proportionate share of INA and goodwill. Now have you understood this point? Why I was saying investment represent proportionate share in the value of INA? Have you understood this point? Bolo. Understood. Now I'll take one question, which is the question they normally ask. This question, so you can do by your own. Joint arrangement question, joint operation. You can read, you will understand. Let us come to 63. P Limited acquired 30% interest in D Limited and achieved significant influence. The cost of the investment was 2,50,000. The associate has a net asset of 5 lakh. The fair value of net asset is now 6 lakh. As fair value of PP is 1 lakh higher than book value. The property, plant and equipment has the remaining useful life of. So what is additional depreciation? You only say is 1 lakh divided by what? 10 is equal to additional depreciation 10,000. After acquisition, D Limited recognized the profit after tax 1 lakh and paid dividend of rupees 9,000. D Limited also recognized exchange loss directly in OCI. So loss to the extent of 20,000. Calculate B Limited interest in D Limited at the end of year by using equity method. Now whenever such questions come, first calculate what? Goodwill or gain. So question number 16. First we'll calculate goodwill or gain. So what is the cost price of investment? 2,50,000. So they acquire 30% at rupees this, minus will do fair value of INA, but to the extent of what share? 30%. It is 6 lakh they have given. 6 lakh into 30%, how much? That is 1,80,000. So how much goodwill? Goodwill is equal to 70,000. First you calculate this, but don't do any journal entry for this. Now we'll calculate what value of investment as per equity method. As per equity method. What is the cost price of investment? Can I say including goodwill? Can I say including goodwill or not? That is 2,50,000. Correct. Can I say then we recognize plus share in profit. So how much profit is given? How much profit? And 1 lakh. So 1 lakh ka how much percentage? 30% will come. 30,000. Then we'll do plus share in, plus not minus. Minus share in OCI because there is a loss. Loss. How much loss? 20,000 into 30%. How much? 6,000 will deduct. Then minus what? Dividend received. So how much dividend paid? 9,000 ka 30% they will receive. Means how much? 2,700. Then there is one additional depreciation. We'll do minus additional depreciation. What is the additional depreciation we calculated? But 10,000 ka will take 30%. How much? 3,000. Are you able to understand? This is become what? Value of investment as per equity method. So easy. So simple. Simple now. What is the answer coming? How much? Have you understood this point? अच्छा, what journal entry will do for this बताओ? Investment account debit to share in profit. What journal entry for this? Investment account debit to share in OCI, but that OCI will be transferred to loss है. So share in OCI to investment, but with that FCTR will be debited. FCTR account will be debited. Correct? Because exchange difference to FCTR will be debited. Foreign currency translation reserve. What journal entry for this? Cash account debit to investment. What journal entry for this? Share in profit account debit to investment. Understood? Correct. Can we take one more question? One more question. This is a good question, good quality question. On 1st April 2019, Investor Limited acquired 35% interest in another entity, XYZ Limited. Investor Limited determined that it is able to exercise significant influence over XYZ Limited. Investor Limited has paid total consideration of 47,50,000 for acquisition of its interest in XYZ Limited. At the date of acquisition, the book value of XYZ Limited net asset was 90 lakh and the fair value was 1 crore 10 lakh. Investor Limited has determined that difference of 20 lakh pertain to an item of PP which has the remaining useful life of 10 years. Similar question, na? During the year, XYZ Limited made a profit of 8 lakh, paid dividend of 12 lakh. On 31st March 2020, XYZ Limited also hold a long-term investment in equity shares. Under Ind AS, investment is classified as FBTOCI in accordance with Ind AS 109. And XYZ recognized an increase in the value of investment by 2 lakh in OCI. And so OCI, ignore deferred tax. Thank you very much. Calculate a closing balance of investor. Similar question. Can you do it by right now? Do it. Similar question, huh? But this question has been given RTP. Therefore, I have taken. And similar question have been asked also in exam. So can you do it by own? Done? Have you got the answer? What was the cost price? Huh? What you have done? You have calculated cost price. It was given only, na? This is given, na? 47,50,000. Then how much profit you have added? Then what? Dividend how much? Minus. Then what? How much? Then what? Then what? Answer. But have you calculated goodwill? That was also required. Goodwill how much? Goodwill is 9 lakh. Correct. Understood. Have you understood this point? Any doubt? Super easy. Normally they ask this type of question. If you have done some pap in your previous birth, if you have done some pap in your previous birth, then they will ask some different question. Yes, Nari. Whatever we have done in previous birth, we need to get the result in this birth, na? Correct. Chalo. But I hope you have not done any pap in previous birth. But normally they ask this question. Means this is the only, I will say, level of CA final. I don't know why, because you can see they have not given any downstream, upstream transaction. But you have understood. If they ask downstream, you can do it now. Upstream they have given, that will not affect investment. So if they ask this question, so you should be able to do. Means till now they have not asked any question that consolidate subsidiaries, associate and joint venture together. They should ask that type of question from my point of view. Bolna re? But they have not given that type of question. Bolna re? They should give balance sheet of what? Subsidiary company, associate and joint venture. With what? Parent company. And they say then consolidate. Then majana. But they are not asking that type of question. So ignore it. Ignore it. I take that type of question in my regular class. But I am not taking. Chalega? You want me to take? 4. Because they will not ask, I know. But let us complete the entire topic. This you have understood. There are some carrying amount. There are some after effect. Means once you have applied equity method, so 3 point we need to take care. Means once you have calculated what? Carrying amount as per equity method. There are 3 special points. First, any impairment loss. So can you see in CFS that investment is a single asset? That single asset require impairment as per India's 36. Calculate recoverable amount, compare with carrying amount, any impairment loss need to be written down. That we can do. So if any impairment loss is given, what journal entry will do? Impairment loss to investment. Impairment loss to investment. But that impairment loss is calculated as per India's 36. Correct. Then there is post-acquisition loss. Post-acquisition loss, this I will explain with this example. Correct. A Limited purchased 30% equity shares of B Limited on 1/4/2015 at rupees 5 lakh. Equity share capital and retained earning on that day is 5 lakh plus 10 lakh. Which what is the net asset on the that date? 15 lakh. And if nothing is given, carrying amount will be equal to what? Fair value. B Limited has reported profit or loss during subsequent year. First year loss, second year loss, third year profit. Calculate a carrying amount of investment in each reporting date. Correct? Understood? Batao. What was the cost price of investment given? Cost price of investment. 5 lakh for how much percentage? Then minus fair value of INA, how much? 15 lakh into 30%, how much? 4 lakh. So how much goodwill? First, always calculate goodwill even though not required. Correct. Then we'll do valuation, value of investment. What is the cost price of investment including goodwill? You should write down including goodwill of rupees. You should write down in this way. 5 lakh. Now first year there is a loss. So minus what? Share in loss. How much loss? So 10 lakh into what? So we recognize the entire loss. Entire loss will be recognized now. It will become 2 lakh. This is the balance as on 31st March 2016. Then once again there is a loss. There is loss how much? 15 lakh into what? So can we recognize now 4,50,000? No, we can't recognize 4,50,000 because investment cannot be what? Negative. So we recognize only loss to the extent of investment carrying amount. Balance loss remain unrecognized and that will not be recognized in this year. Correct? So how much loss is unrecognized? 2,50,000 is unrecognized. What is the value of investment now? Nil. Have you understood this point? Now subsequently there is a profit. So we'll do plus share in profit. Same profit 10 lakh. 10 lakh ka? How much? So whether we can recognize this 3 lakh profit? No. Well, from this 3 lakh, first what? Adjust the loss which was not recognized in previous years or prior years. So how much will do? 2,50,000. The balance profit will be recognized. It means value of investment will what? Have you understood this concept? Correct. Initially there was no question based on this, but in the recent revised study matter they have given one good question that you can read by your own. Have you understood this point? Hello. Easy? Easy. Correct. Then one more point. Long-term interest that in substance form part of entity's net investment in associate or joint venture. Now just try to understand what they want to say. Suppose this is the balance sheet of parent company or investor. So there will be investment in associate. But in investment in associate, we are applying Ind AS 28. Correct now? We are applying which Ind AS? Ind AS 28 na? Arey bol na. In CFS. Correct. Suppose 100 lakh. Can I say there may be some long-term receivable from associate? Bolo yes or no? Or there may be some long-term payable to associate? Are you able to understand? Any long-term receivable and payable from or to associate is a financial asset and financial liability. But can I say it cannot be cancelled? It will not be cancelled in CBS. Can I will apply Ind AS 109? Will apply Ind AS 109? Now what Ind AS 28 says? There are some long-term receivable and payable for which settlement is not planned. If settlement is planned, then to okay, nothing to, it will come in the balance sheet. But there are some receivables. Suppose just try to understand. Everyone just try to understand this way. See, you are my associate. I have given you 10 lakh. Because you are my associate, I have given 10 lakh. But settlement is not planned because we are related to each other. Na? Normally what happens, sometimes I also give some amount to my father, 10 lakh. In my mind, sometime it will be there, it will be receivable, but will you do planning for that? Whether can I demand? I can demand, but can I say no planning for that? You are my father only na. So settlement is not planned. It is just like a permanent investment. So there are some receivable and payable for which settlement is not planned. So what Ind AS 28 says that this will be shown together in balance sheet. Means this will become net investment in associate or joint venture. Means it will be 100, suppose plus 50 minus 20. This will be net investment in associate. So in balance sheet we should present them by adding and deducting, but only those receivable and payable for which settlement is not planned or not foreseeable in future. If suppose settlement is planned, then it will be shown separately only, correct? So what they want to say? An item for which settlement is neither planned nor likely to occur in foreseeable future is in substance an extension of entity's investment in that associate or joint venture, correct? So how to present in the balance sheet? Carrying amount of investment in associate or joint venture determined by using add long term receivable, add long term payable. Means in this too we apply 28. For accounting we are applying what? Ind AS 109. But for presentation we are using what? Ind AS 28. However, all are financial asset only. Investment in associate is also a financial asset. Investment in equity instrument of what? Associate is a financial asset or not? So all will come under the heading financial asset only, but different Ind AS is there. If I say the example, if you want example, so can I say example can be investment in irredeemable preference shares of associate or joint venture. Irredeemable preference shares of associate or joint venture. Now irredeemable preference shares is also equity. Are you getting? But for which settlement is not planned. Similarly we can say what? Any loan given for which settlement is not planned. For which settlement is not planned. These are some examples we can say. Have you understood what I want to say? Have you understood? Yes. Such item may be preference shares and long-term receivable or loan. It is given. An entity shall account such long-term interest in accordance with Ind AS 109. Correct? Understood? Then discontinuation of equity method. When to discontinue? Can I say whenever investment in associate becomes subsidiary, discontinue equity method apply Ind AS 103. Is that we have done is step acquisition. Suppose initially we acquired 30%. So Ind AS 28. Then after that again we acquire 30%. Now control obtained, will apply Ind AS 103. So if you apply step acquisition, automatically it is a discontinuation of equity method. So if the investment become a subsidiary, the entity shall account for its investment in accordance with what? Ind AS 103 and Ind AS 110 means this is discontinuation of what? Equity method. Equity method? Correct. Or can I say if the retained means if there is a disposal of investment and retained investment will become a financial asset. Means suppose we are holding 30%, we sold 15%. So automatically can I say it is what? This means it is what? Loss of significant influence. Loss of significant influence means we will discontinue equity method. Correct? Then in that case we need to find out gain or loss. So same formula, fair value of consideration received plus fair value of any investment retained minus carrying amount of the investment on the date when the disposal happened. This will be gain or loss transfer to PL. Correct? Understood? However, if suppose investment in associate become investment in joint venture or vice versa, associate become joint venture or joint venture become associate, then will not discontinue equity method because for both we will apply equity method. Understood? I hope you have understood. Correct. Separate financial statement is very easy. Separate financial statement means Ind AS 27. Ind AS 27 says that any investment in associate, joint venture or subsidiary will be recorded either at cost price or as per Ind AS 109. And this para is important. So what they want to say? Any investment will be recorded either at or in accordance with which investment? Investment in subsidiaries, joint venture, associate. So for this investment, Ind AS 109 not applicable, Ind AS 27 applicable. For other investment, Ind AS 109 applicable. Na? Investment in equity shares of other entity, Ind AS 109 applicable. Understood? Correct. Then you can read the balance point. Then there is one important point, exemption from consolidation or equity method. Exemption from consolidation or equity method. So what they want to say? Suppose there is one parent company which control a subsidiary and which control assets. Correct. So of course this company may be exempted from consolidation. This company may be exempted from consolidation. When 4 conditions satisfied. Of course, this company will not be exempted from consolidation. Ultimate parent company is never exempted from consolidation. But intermediate parent company will be exempted from consolidation. Are you getting what I am saying? Means it might happen, this also control S. So this may be also exempted from consolidation. So when it will be exempted? When 4 conditions are satisfied. Means it may be also important because they have given one good question in ICAI study matter regarding this. What are the 4 conditions? First, parent is a subsidiary of another entity. That first condition means intermediate parent. Parent is a subsidiary of another entity. It means intermediate parent company. Second, its other owner have been informed and do not object to the parent not presenting the consolidated financial statement. Means just try to understand. For this SS, one owner is what? S, and other owner will be NCI. So this other owner have been informed that we are not preparing consolidation, and though they don't have any issue also, they said okay, don't prepare CFS, goodbye, good night. So this have been informed to the other owner and other owner does not object to it. Second condition understood? Third condition, such parent are neither listed nor in the process of listing in the recognized stock exchange either in India or outside India. Means it is an unlisted company. Listed company are not exempted. Last point, the ultimate or intermediate parent company is preparing what? CFS. Means for SS, either S is preparing or P is preparing what? CFS. For S, P is preparing CFS. So if their ultimate or intermediate parent company is preparing CFS, so they are exempted from consolidation. Now, if S is exempted from preparing CFS, so of course they are also exempted for equity method. Understood? Understood point? So when I am preparing CFS, so in CFS actually what happening? In CFS, just try to understand, we are including subsidiary, we are including associate, and we are including joint venture. We are including subsidiary by using line by line method. We call it line by line method. Means all line item will be consolidated. We call it line by line consolidation. And we include associate and joint venture by using equity method. So if they are exempted from consolidation, so they are exempted automatically from which method? Equity method also. Now one doubt will come, just try to understand. Suppose X Limited has an associate but has no subsidiary. Quite possible. Whether X Limited will prepare CFS? Are you able to understand what I am saying? X Limited has only associate but no subsidiary. Whether they will prepare CFS? Yes, they will prepare CFS by applying equity method. So they will prepare CFS by applying equity method. There is now changes in Companies Act also. Initially, Companies Act used to say only subsidiary, but now Companies Act is also amended. Correct? So yes, X Limited will prepare what CFS? Equity method, not line by line method. Correct? So it means now one question arises whether X may be exempted from CFS, means by equity method. In this case, so okay. If they are exempted from line by line method, they are exempted from what? Equity method. But suppose they have only one associate, whether this X Limited may be exempted from preparing CFS. Yes, same thing given what they are saying. An entity need not to apply equity method if following condition are same point is given. The entity is a subsidiary of another entity. Its other owner have been informed. Such entity is neither listed nor in the process. The ultimate or intermediate parent company is preparing CFS. Then what Ind AS 110 says that investment entities are also exempted from consolidation, even though it is not an intermediate parent company. Means what they are saying, normally investment entities are those entities which do investment. And can I say their objective is to purchase what? Shares only. So eventually they may obtain control. There was no intention, but eventually, suppose I am 10%, 10%, 10%, 10%. Eventually they got control. But there was no intention to control. Quite possible, na? Are you able to understand? So what they want to say, ki it is quite possible that they have done some investment A, B, C, D. This was 20%, this was 30%, this was 40%. By mistake, they purchased what 60%. By mistake. By mistake, not they want to purchase, but there was no intention to control. So whether they will consolidate, bola no. If it is an investment entity and all these investment are measured at fair value. Means can I say if they are measuring at fair value, it means there is an intention to earn some short-term profit. Means FBTPL na. Means these all investment are held for the purpose of trading. Held for the purpose of trading. So why to consolidate? Are you getting what I am saying? So what they are saying, any investment entity, a parent which fulfill the following two conditions are also exempted from consolidation. If parent is required to measure all its subsidiary at FBTPL. Now when it will become investment entity, you can see the definition, you can read. Have you understood this much? Bolo. Understood? I hope you have understood. Done. Chapter over from my side. I have done all the points. Now at the end I have just given one format of SONA. This is help for revision. Just once read. Are you able to understand? Just read entire point. Just read entire SONA. This will help you for revision. This will help you for revision. Just read entire point once. Are you able to understand this? Correct. You can also write down some more information if you have understood. Write down. Write down. Write down this. Normally I have seen student do mistake in other equity and NCI. Better I should give one statement so that you don't do any mistake. Correct? So first we write down other equity and NCI together I am doing. Chalega? Other equity can be retained earning, reserve and surplus, etc. We'll take balance of parent company as given in the balance sheet, and this will be initial value. Initial value can be fair value or pasina. Correct? Then plus or minus share in PL. Suppose you are taking before dividend as per ICAI solution. Understood what I am saying? So it will come in both. Correct now? So I have done share in PL before dividend as per ICAI solution. Are you able to understand my emotions? Huh? Are bolna re? Correct? So share in OCI will also come plus minus. But be careful, this will go to retained earning. This will go to other component, other equity, means as per revaluation, surplus, etc. Be careful about that. Are you able to understand what I am saying? Are bolna rahe? Are you able to understand? This will go to FCTR, revaluation, surplus, FBOC reserve, as the case may be. Then minus dividend received. Why dividend received? I have said because I have done before dividend yahan par. Correct. Then minus unrealized profit. If it is downstream, then only parent company, nothing will come in NCI. Bole yes or no? If it is upstream, it will come in parent company and NCI both. Correct? Bolo. Then minus impairment loss of goodwill. So if it is full goodwill, then what? Both na. But if it is what? Partial goodwill, then it is what? Only parent company. Yes, they may give impairment loss of other asset. Yeah, ICAI also other asset of subsidiary company. They may give, they have till now they have not given. So it will be always to both na. Always to both. Or write down in this way better. Other asset of subsidiary company. Then both. Any parent company then? Means impairment loss of other asset of parent company. Then to only parent company na. Are you able to understand my emotions? Correct? Write down any plus minus error in which books? Error in the books of parent company. Because error in the books of subsidiary company, you have taken where? In Sona. Huh? So it is only error in the books of parent company will affect retained earning, not NCI. Are we able to understand all these points? Have you understood? Correct. This become what? Understood. This will help you, I think, for revision purpose. This will help you na. Understood? Follow. So can I conclude that this chapter is completed from my point of view? Any question you have in your mind? Chalo. Today we have taken a lot of time in consolidation. In the morning we are taking consolidation only. Can we start one more chapter if you permit me? Because I need to complete India's 19 also. Target was that also. India's 19 and India's 108. I will take 5-minute break. But have you understood this much? We'll take 5-minute break. After 5-minute break, we need to complete India's 19. चलेगा?